Hey, good morning, everyone. Shraddha, can you confirm my voice is loud and clear?
Ye- Yes, Sandeep.
Okay, thank you, Shraddha. Okay, my name is Rangu. On behalf of ClearTax, Credit Watch, Quality Chaos Technologies, and UBS Forums, I welcome you all for this virtual summit on our fifth edition of Future of Finance. First, I'd like to thank all of you for sparing your time and joining the session. Before we start, a few guidelines I would like to make you people aware of. The webinar is happening on Teams platform and this session will be recorded. Hope you people will be fine with the same. We will take your questions in the Q&A session at the end of each session. In the Q&A session, please use hand raise option in case of any question and you can put up your question in the chat window and the Q&A section. When you ask your questions, when you raise your hand, we will unmute you and you can ask your questions through voice as well. Okay, now coming to the webinar, as you all know, as CFOs and finance leaders anchor themselves in an increasingly volatile landscape, they have to play a strong and critical role in stabilizing the business currently and positioning it to thrive in the post-COVID 19 scenario. With all this uncertainty, immediate challenges like effective data management, liquidity, scantiness, process automation, disturbed supply chain, and an ongoing need to protect asset and manage cost are putting significant pressure on the finance professional. To survive in this disruption and changing times, CFOs and finance leaders need to evolve into more strategic, analytical roles with data driven decisions, helping drive performance and adding value throughout the business. Today, this session will equip you with the best tools and strategies helping you increase productivity and agility of your finance process by harnessing data, RPA, and other technological innovation for future business growth. On that note, I would like to invite our keynote speaker or the chairperson, Mr. Srinivasan Chari, who is the co-founder with ClearTax. On that note, all to you, Srinivasan, for your chairperson's opening remarks, sir.
Thank you so much, Sandeep. Hope everyone can hear me. So, welcome everyone. Big thanks to all of you for attending. 15 years ago, right? Like, if you told me that some of the most complex software problems that I would be designing for would be taxes and compliances, I wouldn't have believed you. I would have said you're lying. But it's interesting how the B2B world has, changed so much, right? Like there are hundreds of compliances that you have to now do in India. Back in the day, it didn't really matter whether you're doing like 20 of them, 30 of them. But now it's so transparent who is compliant and who is not, and the government is really, really going behind everyone on this stick, right? And this takes a lot of CFO and a lot of like top management time and bandwidth if this isn't under control. It's very interesting how we've gone from a place where everything was, pen, paper, Excel, and basic tools to now like probably the most comprehensive, the most digitized regulatory or compliance systems in the world, right? Like I don't think there's anyone else who has tax systems, payment systems, real-time invoicing like we have in India. And what is really interesting is that the government has put a regime where compliances and supply chain are completely intermingled. Right? Like compliance in India is no longer what it used to be. And now that this is happening, right? Like the government has taken a very strong position with technology, and companies have to follow a very similar methodology, right? The continuous stream of new regulations coming into force every other month really challenges a business's compliance function. Um, so with this, like we're seeing gaps in input tax credit, and that is causing a lot of blocked working capital, and there's a lot of impact on the business's profitability as well. Besides compliance, there's going to be new laws that are coming into effect that are now affecting invoices, affecting your vendor payments, payouts, and receivables as well. The only realistic way to reduce a company's compliance risk in such a scenario is just to automate it, to invest in for the finance function to really like think about software, to think about actually investing in future ready technologies. Um, Automation really guarantees accuracy, and I think that's basically where we come in, right? So Clear, as we would have formerly been known as Clear Tax. So we started the company in 2011 to simplify taxes, and over the years we've evolved beyond taxes and we've grown tremendously. Like with the coming of GST in 2017, we deepened our reach via products that touch every aspect of every single business. This includes now our suite of GST compliant products, e-invoicing. We have specific products to help with input tax credit, to help with e-way bills, and for your larger network, for your suppliers, for your distributors, for small businesses. Fundamentally, we have a clear one ERP suite, and we also serve tax experts. We launched a tax filing and wealth management app called Black earlier this year, which is used by over 5 million consumers in the country. We expanded from being purely a tax management portal to someone who has many SaaS solutions, including invoicing, wealth management. Today, over a million businesses and tax experts and over 3,000 of the biggest brands and the enterprises in the country use us. So I'm very proud to say that we power about 10% of all of the B2B invoices in the country, which contributes to roughly about $400 billion worth of trade value every year. We contribute to 10% of India's e-invoice generation. And going from Clear Tax to Clear, I think the Clear identity, with that, the company just continues to offering great products, nurturing the legacy of accuracy, security, and like complementing the Clear Tax brand. And would love to see it create a lot of value in all of your lives, right? Um, so coming back to the topic at hand, the future of finances. Like Indian businesses now have they have to really go digital, and as the gaps in taxation get closed, right? Like tax declarations, tax deductions, traditional audits, all of these things will no longer be necessary. There's no going back from here. The regulatory processes are far more efficient, and costs in the long run are going to become lower, and companies have no choice but to keep up. Businesses, like every business function, is going to be digitized. It's not just about payments, taxes, and credit. It'll include procurement, logistics, HR functions like inventory, import export functions, and more. I think businesses should really look forward to what function they can digitize next, because it's advantageous to stay ahead of the game rather than actually staying behind, right? And despite now a lot of the digitization in taxes, the finance processes are pretty manual and error prone. There are still a lot of legacy practices in play, multiple disparate modules. This is fine in the past because supply chain and compliance, like I said, didn't go hand in hand. But now with this converging, I think with this convergence now, that's why we have developed the Clear network suite, where we are digitizing everything from AP to compliance to actually enabling and digitizing your larger ecosystem as well. So businesses small are struggling with cash flow visibility. There are unknown leakages in their spends. The manual processes are pretty error prone as well. I think it's time to digitize and do it fast. So we've created something called the Clear Network Suite. It comprises like our Clear Network AP modules, which digitizes the entire accounts payable function, all the way from vendor onboarding to assessing the vendor compliance risk and spend analytics as well. We have a supply chain finance suite where we're fundamentally helping digitize the supply chain, providing credit and creating liquidity for your supply chain itself. It's focused on like early payment programs for vendors while generating extra income for enterprises as well. It's like going from buy now pay later for small businesses all the way to invoice discounting and factoring. I think these are the ways in which we are bringing in a lot of technology, we're bringing in a lot of automation, we're making sure that CFOs and finance functions are actually have the ability to leapfrog into the future, spend less time doing manual stuff, get a lot of things, couple of clicks of the button, you actually can solve a lot of your problems. So that's really how I think the finance functions are going to evolve in the future. Um, with that, that's mostly the time I have. Thank you so much for, I think, attending. Hope you enjoy the rest of the engaging panel discussions. Over to you, Sandeep, and everyone else. Thank you so much.
Thank you, Srinivasan. Thank you. Thank you for your opening remarks. All said apt, and for sure people will benefit out of your thoughts. Thank you, Srinivasan, for your thoughts. Okay, let's move to our keynote presentation that will be by Anand Agarwal. To give you a background, Anand is the financial director at Amazon Consumer Business and plays a major role as CFO. Prior to that, he worked for years with Suez MNC, Syngenta as head of finance for South Asia and almost for 16 years with Britannia. He has diverse experience in wide range of financial disciplines across different businesses, food, FMCG, chemical, and e-commerce. On that note, all to you, Anand, for your presentation.
Yeah, thanks, Sandeep. I'll just put my presentation. Can you see my presentation?
Not yet, sir.
Okay. Is it visible now?
Yeah, it's coming up, I guess. Yes, it's visible now.
Okay. So, thank you everyone for joining this session. Good morning to you. I'm excited to be part of this summit, which is on future of finance and redefining the role of finance leader. Uh, I'm privileged to be the keynote speaker. When I saw the lineup of the speakers, I I thought, how will I do justice? But I attempted to put a small presentation for all of you, and I will run through that. I've got 20 minutes. If I'm able to complete before that, I'll be happy to take few questions from you. With that note, let's start. Uh, about myself, I think Sandeep has already covered, so I'll skip this slide. As all of us know, the world is changing, and we have transformed from a stone age to a digital age. It's a big
Sir, sorry to interrupt. Can you put that on presentation mode, sir? I guess it's on not on presentation mode yet.
Yeah, is it okay now? Sandeep, is it okay?
I guess it's coming up. Okay, sir, please go ahead, sir.
Is it visible on the screen?
Yes, yes, please go ahead, sir.
Okay, thanks, Sandeep. So the world is changing, and we have moved from stone age now to the digital age. And what is happening is, because the world is changing, it's also resulting in business environment becoming complex and volatile. Sandeep, there seems to be some challenge. Can I get out from the presentation mode and just do the slide sharing?
Yes, you can do that, sir.
The slide is frozen. Yeah. So the business environment is also becoming complex and volatile. There's a disruption in technology, and a lot of us who have grown up have seen in childhood Kodak, Fujifilm, Nokia mobile. Technology disruption has made the market leaders to disappear. At the same time, business models have evolved. So you got Uber, which came up as a cab aggregator, which has got Airbnb, which came up with a stay-at-home or a hotel aggregator. And then the regulation is also evolving very fast. We had demonetization, there was a GST. Srinivasan spoke about how the landscape has been changing and how his company in last 10 years has been building products to keep pace with regulation, where the compliance monitoring system has also got strengthened and the data is real time available with the government. So in this environment, which is becoming complex and volatile, the role of finance has also started changing. So if you remember, the role of finance in earlier era was more narrating what has happened, giving a commentary on that. It started shifting slowly to what will happen, that is forecasting and building plans, which was more of a predictive analysis. Currently, However, the role of finance has shifted from there to how can we make it happen? That is, how do we partner with the business to make something happen, to make the business grow sustainably, which is now called a prescriptive analytics. So we have shifted from narrative to forecasting to making it happen. However, we should note that the basic role of finance has remained unchanged. So whether it's a controllership, risk management, compliance, corporate governance, safeguarding interest of stakeholders, that has remained unchanged and will continue to be the core part of finance role. So with the changing role of finance and the world, what should we do? Right? And I will like to draw your attention to Darwin principle, which speaks about the survival is for the people who are most adaptable to change and not for who are intelligent or strongest. So it calls for us in a changing world to become more adaptable to the change which is taking place. So what does this mean? It's good to know that we need to adopt, but what does it mean to adapt? So we have to design the finance for a new world, which is the digital world. And what does it entail? Right? In our assessment or in my assessment, the three things we need to do to become adaptable to this changing world. The first and foremost is to leverage the tool. The second one is on the business model. How do we evaluate business models? And third, how do we invest in capability building? That is people and culture. So these are the three important factors which we have to consider as we build a finance for a digital future. And I'll cover each one of them. The first one, leveraging tools. Data is at the core of everything today we do. But is the data sufficient? Is just having the data sufficient? Right? So when we look at this aspect, having data is good, but we should have tools and capability to convert this data first into information. Once we convert into information, we have to generate insights, and basis that insights drive actions and then predict the outcome. You see the two of the circles are in orange and balance three in green. So first two part we are there to some extent. The next three part is where we need to do huge amount of work so that we add business value and create sustained value creators. What it also means that information or data is the oil of the 21st century and analytics is its combustion engine. So a lot of us will have the oil. The trick lies in how do we create the combustion engine which is better than others. Once you have a combustion engine which is better than others, it will give you competitive edge and your chances of success will increase disproportionately. So invest in building a combustion engine, innovate to move from an analog organization to a digital organization. This will be one of the key differentiating factor going forward. Same thing on the tools. If you look at the traditional computing versus artificial intelligence, till now we have been using for some time back the software or the program to generate an output basis the input which we give. For example, in the SAP module, if you got a bill of material, if you enter what is the output you have generated or the production, it will automatically flush out the material which has got consumed and deplete the inventory. And we were very happy with that, saying that a lot of our work has got automated. We don't have to now, issue a requisition and then deplete the inventory. It is happening auto. But the world has moved a step ahead. Now the era of artificial intelligence, input and output are used to generate a program for decision making. And you must be wondering whether I'm speaking Greek and Latin here. So let me give you some good example. One from all of our personal life, and second from how we in Amazon use this. The first one, the personal life. Whenever we log into Google or go to any other site, when you see a content, it is personalized, right? So if you bought a shoes, or you search for a shoe. Next time you go to Google, you will see an ad for a shoe. What is happening is machine learning or the artificial intelligence has captured that this person is interested in buying shoes, and that shoe advertisement will come to you. And if you've looked for a shoe, a particular selling price or particular value, it will show the multiple options in that value. And that's how the program is getting generated, by looking at input and the output. Amazon has got thousands and hundreds and millions of ASINs or the SKUs. Imagine if I have to do a sales forecast, the Excel sheet itself will not take the number of SKUs we have got. And it's humanly impossible to forecast the sales basis which an infrastructure has to be built in a short term, in a medium term, and a long term. What we have done is we have leveraged machine learning, which has taken inputs. For example, how many are the new selection or the ASINs or the SKUs we have added over a period of time? How has our customer inputs behaved, or what are the customer inputs we have added in last few years? For example, is our speed of delivery improved? Has the number of sellers improved? Has the depth of offer improved? The computer takes all this input and the sales generated as an output for the demand to forecast what is the likely demand in next 1 month, in next 1 year, and next 3 years. The computer or the software or the program is trained by again feeding the input and output data as we go ahead in our journey. And as we train our computer or the program, we also measure the variance versus actual on the forecast getting generated and the precision with which the forecast is happening. So artificial intelligence plays a key role in personalizing content as well as for forecasting, etc., with a high precision than what we can do manually. So that's another area where artificial intelligence is playing a key role and is going to be a future capability which organizations have to develop. What it essentially means, we should leverage automation, machine learning to improve execution and decision making. What we call in Amazon, one of the metric is hands of the wheel, right? Which means you are driving without your hands on the wheel. That means it is automated. That may be one of the key metric. For example, if you are part of accounting team, you should look for what percentage of your general voucher entry at the month end is automated. What kind of processes which are manual and repetitive is automated. And you use that percentage metric to drive automation and put an entitlement or a goal to what extent you want to drive automation. Automation will not only improve the time and manual effort, but it will also improve the accuracy of the process. With this, I come to the second factor or the tip for designing the finance for digital future, the business models, right? The business model has been ever evolving. Take an example. Earlier, when we used to look at fixed asset schedule, plant and machinery used to be the key asset. It is evolving now. For example, the number of customers who interact or purchase on a particular site is a big asset which that organization has got. Srinivasan spoke about 5 million customers or people who file return through Clear. And imagine if you are able to charge 1,000 rupees, you are able to generate a revenue of 500 crores. So that's a multiplier. And if you invest 100 rupees to acquire that customer, it's worth doing it. All our traditional model till now has been on the transaction economics versus long-term economics. The finance leader for future has to start thinking on long-term rather than being on the transaction economics. So if you look at in this chart, you have to do a net present value of cash flow over a long term and just not restrict to the cash flow on the first transaction which you may have, which is called a transaction economics. So optimize for future value, net present value of future cash flow rather than the transaction. And in certain transactions, you may still be red as you see in this chart, but overall it will be green. That's a key capability finance team has to build. And also, how do you build a metric around that? Because until unless you have a metric, it's very difficult to understand what is the net present value of future cash flow. It's a very key metric or key capability a finance leader has to build for future. The third one, the first two are not possible without having the talent and skills and people and culture. It's very critical to have right set of people and the right culture in the organization to enable the first two and become successful in a digital world. So we need digital talent. What does it mean? It means you need to have talent who also are good in data science and analytics, apart from being good in accounting and finance. So we need a talent good in data science, good in analytics, who can help us to leverage tools, build metrics, and help us to convert all the data which we have got into information, help generate insights, which will drive actions and predict outcome. A very critical skill to have. The second and most important part of this is also speed of decision making. Should we do a lot of data analytics or should we also balance it with intuition? The future leaders needs to strike a balance between how much of data depth we'll go into and how much of intuition will we bring into and how do we create a balance. I want to share with you how in Amazon we use this technique for faster decision making. We have a concept of something called a one-way door decision or a two-way door decision. The one-way door decisions are generally the decisions which are reversible. That means if you walk out of a door, you can come back inside. The two-way door decisions, sorry, one-way door decision is irreversible decision. When you walk out of the door, you cannot come inside, right? So it's irreversible. Two-way door decisions are decisions which is reversible. So if you walk out of the door, you can still come inside. Now we use this concept extensively. In case of one-way door decision, the rigor required is quite high because once we made that decision and execute, it's no going back. But in two-way door decision, even when we have 70% of the data, we can make that decision because that is reversible. Let me share with you an example. Suppose I have got a shop in a mall and I see a lot of people coming into the mall but not walking into my store. And hence I may decide to run a promotion of 10% off so that I can attract those customers who are visiting mall to also come into my shop. And that's a two-way door decision because I can discontinue that promotion at any point of time without impacting the customer experience. Take the same example, and I've got a successful store in a mall, and the mall is planning to open some another mall in some other locality, and I have an opportunity to buy a store into that mall. Now this becomes a one-way door decision because I need to invest in buying that store, invest in building the infrastructure in that store. So I need to do a lot of due diligence on the locality, on the estimated footfall, on the quality of customers, etc., before I take a decision. So on a two-way door decision, even with 70% data, please decide. On a one-way door decision, build rigor. What it helps to you is to identify decisions which can be taken faster and move ahead, and you are able to differentiate between the two. The key soft skills which you need in this era, apart from this, and we have leadership principle in Amazon, we extensively use it. It's drawn from there. First is earn trust. You have to collaborate with your colleagues to deliver results. Competing with colleagues will not help to deliver results. So earn trust is one of the key one, and you have to earn trust not only of your colleagues but all of your stakeholders, whether it is a customer, whether it is a regulator, whether it's government, or whoever it is, whether it's a vendor. You have to earn trust and be fair to them. Demonstrate backbone. You should have the ability, or the finance leader should have the ability to call spade a spade, irrespective of the hierarchy and the leaders present in that meeting. It's extremely critical because if you don't demonstrate backbone, it may result in suboptimal decisions, and that's better to avoid to be successful. The third is curiosity to learn. Given that we are in an era which is ever evolving, things are changing with a rapid speed. The finance leader should be curious to learn on how things are evolving and how adaptable we are to this changing world. And the fourth, there should be appetite for failure. We should celebrate failure, but there's a distinction. If you are experimenting and failing, that's right. But if you're failing on operational execution, that is something we should not celebrate. So when we say appetite for failure, it is for experiment and not something which you are good at. For example, if you know that you can build a factory in 6 month time and you build it in 8 months, that failure is not something we should be celebrated. But suppose you say I build a factory in 6 months, let me take a target of setting up in 4 months by innovating, and you end up building in 5 months. That failure of 6 months to 5 months is worth celebrating because you have innovated, you have experimented, and you have learned something new. And most important of all, stay focused on the customer. Because if you're not focused on the customer, all the above three, what I spoke about, tools, business model, people, and culture will not help. So keep customer at the center of all your decision making, because most of the decisions are two-way door decisions and are reversible. What's difficult to reverse is loss of customer trust. And that should be at the center of all the decision which a finance leader either takes or helps the organization to take that decision. In summary, leaders in the future will spend 50% of their time managing people, which are the talent, and the other 50% on managing machines. And that's how I envisage the role of a leader of finance in digital world is going to be. And still day one. So we are still in the very, very first day of our journey to a large journey which we have to cover. Thank you, everyone. I know I rushed through it. I am conscious of time of other speakers who are going to come and speak. Uh, Thank you, everyone. If there's one or two questions, and Sandeep, if time permits, I can attempt to take that.
Thank you, Anand sir, for your time and for a wonderful presentation. Right, we'll take one quick question. Attendees, if you have a question for Anand sir, please put it in chat box so that I can put it across for Anand sir. I guess we do not have a question, sir, but we do
Okay.
have comments for your excellent presentation, sir.
Thank you so much. I really enjoyed, and I look forward to hearing two good leaders who are going to speak after me. Thank you so much.
Yes, sir, for sure we'll have a wonderful day ahead. Thank you, Anand sir, for your time and for the presentation. Thank you, sir. Okay, let's move to our next presentation, the increasing role of technology in network and compliance. For that, I would like to invite Rohit Razdan, who is the Chief Business Officer at Clear from the makers of ClearTex and is a seasoned business professional. Before Clear, he was the Director for Investment at Gaza Capital, a homegrown private equity fund, and a partner at Arth Capital. Prior to this, he was engagement manager at McKinsey, leading teams on corporate finance, due diligence, strategy, marketing assignment, and various others. Rohit is an alumnus of the Wharton School, North Carolina State University, and National Institute of Technology, Tiruchirappalli. On that note, all to you, Rohit, for your presentation. Can you hear me, Rohit?
Yes, hi.
Yes, Rohit, you can start off with your presentation.
Yes, thank you. Just one second.
Sir, you can switch off your video because I guess there is a bandwidth issue. That is why it is showing loading. And again, I guess then the presentation will be okay.
Great. Is my screen visible?
It's loading, sir. Yes, it is visible, sir. Fantastic.
Excellent. Excellent. Good evening. Good morning, everybody. Very nice to hear Anand and others before who have spoken. I would take about maybe 20-25 odd minutes to discuss a topic that's very close to our hearts at ClearTax. Now we are called Clear, which is how technology helps in financial compliance and how is that leading to creation of new networks, in the business ecosystem, right? So let me very quickly tell you how, in our opinion, India is organized today from a business standpoint and from a business compliance standpoint, right? There's about 170 odd compliances that a mid to large size business has to go through, and obviously these vary by industry a little bit, but at least 150 to 200 odd compliances that you have to go through, right? And it's not very easy to adhere, right? These are changing all the time, and there's also several other challenges that I will discuss today, right? Now, when you think about how the businesses were organized till as recent as 5 years back in India, compliance and supply chains were two very distinct areas, right? Both had a CFO angle to it, but they were fundamentally two separate areas, right? And the CFO area was also like CFOs used to think about compliance, but not as frequently as they would think about 10 other topics, right? It was largely, compliance was paperwork led. There was just, kind of no digital, I would say, angle to compliance. The surveillance and so on were very, I would say, sporadic and extremely manual. And there was hardly any, I would say, business interaction on the compliance side. It was something that, two or three people in the company knew about, and the rest of the people kind of didn't talk about that at all, right? Similarly, supply chains, again, right, like those were very separate, much more local. Supply chains had, some tools obviously over there, but they were many of these were clunky. It was largely a logistics manufacturing kind of a, I would say, area, and there were some, vendor management people and so on, but that's it, right? These are two very different paths, right? I think what we are seeing is these are being coming together in India in a very meaningful way, and I will discuss all of this today. Right now, over since 2017 till since GST came into the country, right? We have had GST, e-way bill, e-invoicing, ITC and 36(4) kind of constraints kind of coming in. And now, obviously, this year you had, kind of TDS, TCS related changes as well coming in, right? All of these things, right, are fundamentally creating, I would say, like merging of compliances and fusing of compliances in supply chain area, right? It's very difficult to now pull apart, one from the other, and all the, I would say, compliance people kind of have a good sense of now supply chain and vice versa, right? This is a big change that I think. Yeah, this is a big change that seems to be happening in the country, and I think what we are seeing is, from given our vantage point, we see that most of the businesses, if not all the businesses, right, are finding it extremely difficult to achieve complete compliance, right? And that's because of the environment that we are in, right? The laws are changing, kind of on multiple fronts. And it's not very easy to keep pace with them. The rules that the government is imposing around those are becoming more stringent. So in addition to there being laws, the government is also moving very fast towards following those laws, implementing fines and interests and so on and so forth. The business systems that are sitting today in many of the companies are not very adaptive, right? And they were not really designed for the kinds of dances that we are asking them to do now. They were never designed for that. The whole system requires, for you to be compliant, you need to have a lot of counterparties that are compliant as well, right? And there's too many of them sometimes over there. And last that I kind of alluded to is that compliance is now moving more and more towards a real time I would say mentality, right? And this is where the government is going. And today it may be electronic invoicing and other things, but over a period of time, if you see the direction that the government is taking, not just in India, I think globally, is that they're trying to reduce the once a year kind of load, and they're saying just be compliant all the time, share data all the time, just so that kind of it becomes you are just by habit compliant, and you're not doing it at the end of the year for some particular filing, right? This is the broader direction that we believe the taxation and the compliance regime is taking the country, and therefore it's too early right now, and for a lot of businesses to have adapted to this fully, right? Now, when you think from a CFO's perspective, right, especially when you're looking at it from a developing market perspective, right, there's two angles to look at it, right? One is that, hey, compliance is something that I have been told that we have to do by the government. I think that's great. The second is compliance can also be a differentiator, right? Um, what we are seeing is, and there are a lot of studies. We have quoted one from IFC, but there's many other studies as well. There are shareholders that are ready to pay premium for um, for companies that are following very strong governance and compliance regimes, right? And that's purely because it's a very strong signal of quality, right? Because in the emerging markets, especially the kind of macroeconomic, I would say, storms that we see in the emerging markets, which are much different than what in many of the developed markets you see. There's so much uncertainty that from a business standpoint, at least how well you are running your business in the light of all the uncertainties becomes very important as a signal to the shareholders and the broader community of people who adjudge what the business is worth, right? So now, as I mentioned earlier, a lot of companies are finding it difficult to stay compliant. In addition to the compliance angle, there is also a very important, I would say, P&L angle to this, right? Um, we see from our own data that 80% of enterprises leave sizable money on the table, right? And many of you who are, I would say, closely involved with GST or any kind of, I would say, taxation side would understand what we are talking about. So input tax credits and so on. There are many places where things leak, and in some cases it's a blockage of working capital. In other cases it's just loss overall, right? Which kind of never comes back, right? So it keeps leaking from multiple reasons: ITC, 3B filing, vendors not being compliant, all of these things, right? And it's not a small amount when you add up for the full year. It's not a small amount, right? Now, in addition to compliance, there is also deep operational issues, as we kind of discussed earlier in the presentation. Supply chains and compliances have become fused, right? So there's a lot of manual activity. There's a lot of communication that you have to do with your partners, your vendors, your distributors and whatnot, with regards to resolution of now taxation and compliance related things, in addition to the the this when do I get my shipment and those kind of things, kind of commercial things as well, right? There are audits and compliance lapses that happen, and just cash flow visibility overall remains poor. And then there is obviously kind of the classical invoice management systems being broken, processes being broken, and so on and so forth, right? So these are all these things that we believe become accentuated because of kind of compliance and supply chain kind of coming together, right? So because of compliance, the supply chain inefficiencies or the supply chain gaps, supply chain system gaps, and so on become, I would say, a bit more amplified, right? So these are the questions on the right, which whoever in your org deals with supply chains, I would imagine like at least 4 out of the 5 questions would resonate with them, right? Now, when you look at from a CFO's perspective, right, there are 4 or 5 big areas that we believe are really relevant, right? Planning and budgeting, financial compliance, payments and credit management, vendor distributor interactions, and then record keeping and reconciliations, right? Now, in our opinion, right, when you look at when you slice this cake in different layers, right, and you look at the what the big four are doing, right, and I'm going to make the argument in the next 1, 2, 3 slides that this whole thing of how compliance is running, real time technology led compliance, it is something which is a new category that CFO should be thinking about, right? It seems like someday that's something that big four should be doing, because obviously they've been doing financial compliance audits and so on for a while. Also record keeping and reconciliations they help with a little bit, but fundamentally they are not technology first companies, right? They have large manual teams and they're designed to fundamentally do audits. Obviously they're trying to do other things as well, but they have small tech teams and large manual teams, right? Like that's fundamentally true of big four, right? And this is, again, I'm just trying to say this is the nature of the service providers in that area, right? There's no common workbench, there's no common kind of process and platform through which your teams, whichever teams those are in the finance function, and their consultants, right, can share data very, very quickly and can look at the same, I would say, material all the time, right? That is ideal from where you sit, right? And that leads to obviously a lot of dependencies and loss of control that you feel, right? I mean, been in so many times when I have felt that, hey, you know what, like they know more about our business that sometimes our people do, and that feels like it has taken away control from you, and at the end of the day it's not healthy from a company standpoint, right? The other solution that obviously comes in where record keeping and a lot of the, I would say, system of records sit are the ERP systems, right? Now, from a conventional ERP system standpoint, right, what we have to acknowledge is the kind of systems, without taking any specific names, right? Like India is not a priority, right, for them, right? So ERPs have their own, and especially as things are going cloud way, right? They have their own product roadmaps. They have their own, I would say, set of priorities, and they would, like any other rational business, right? They would actually go and work through, from a revenue standpoint, right? And India is not very large, which we know, right? Secondly, many of them have very, very, I would say, legacy. I would say legacy that they have from the desktop era, right? And therefore they are not agile, right? It takes months to change something, and any of you guys who have tried to tweak things or try to replace ERPs and so on would know very easily what I'm talking about, right? And last is that ERPs are designed to be relatively neutral technology tools, and they're not very, very domain specific. So whatever is globally fairly standard, those are the things that they would have. Otherwise, it becomes difficult for them to again, right, to be designed from a CA perspective, from a law perspective, right? Now, in our opinion, what many of the businesses that are conscious of the brand and are looking ahead, right, are becoming early adopters of technology, right? I think Anand and others have spoken about in the shortly that what are the various areas that you can do on the customer side and so on. But when you think about the back end, right, there is as much need to transform your back end as there is to transform your front end, right? Customer side, I think that becomes visible to almost everybody very, very soon, right? But if you don't have a strong backend, I think things eventually will struggle, and that leads to frustration in your teams one way or the other, right? Now, from a backend perspective, right, especially for compliance and so on, what are the few things that a CFO would want, right, or would wish for, right? In our opinion, these are the three things, right? Number one is, at this point of time, I think because government has gone digital, right, and I think very few people appreciate how fast the B2B stack is becoming digital. I think all of us are very aware of how B2C technology stack has become digital, right? From a B2B standpoint, now in our opinion, between 2020 broadly and 2025, there will be probably like 70-80% of the processes will become digital, right? So this is what I think more and more CFOs are also now getting used to, that let us embrace digital everything, right? Invoices, payments, taxes, filing, all of these things, right? Second is automation, right? So there are many things which can be automated, reconciliations, there's data flowing from one to the other, and so on and so forth. In our opinion, like this is again the second thing that will probably be fairly consistent across most of the CFOs of mid to large size businesses, or businesses which have any amount of complexity in there, right? And the third is just from a data standpoint, right? Single source of data that we can agree upon. Otherwise, we are all aware what happens with Excel sheets. There are 7 different versions of the same Excel sheet that gets maintained by different departments and whatnot, right? You want to see certain data that you can modify, which talks to your ERP, but ERP data that doesn't get changed beyond a point, and so on. And different teams over a longer period of time, we see vendors, distributors, internal teams, external teams, all looking at the same stuff, right? That would make everybody's life a lot easier. Now, this is where I think we like to come in, and this is where we give customers a set of choices. We make SaaS software, which some of you may be aware of, which sits on top of your ERPs if you have ERPs or accounting systems, and if you're a small business, we give you standalone tools, and that allows you to maximize your tax savings, that allows you to automate reconciliations. We interpret the law for you, because we have a lot of CAs in house. We make very good UX, which makes it easy for all kinds of, I would say, people at different levels of technology in within your company to understand what they are doing. Obviously, we make we make interactions happen with ERP in a very elegant manner. We keep you away from making mistakes, and we also allow you to do automated communications with your vendors and follow-ups with your vendors. All of these, which over a period of time, I think will become standard. But right now, I think obviously people are used to certain government tools and so on, which are okay for a small business, but which are probably a little bit less than adequate for businesses of high complexity. Right. The other thing that we believe, where compliance is eventually pushing the whole supply chain, right? And this is at least our view, is that uh, things will move to things will move to a network kind of a layer, and so think about it as a much more complex version of a WhatsApp group, and replacing kind of the SMS era, right? You want different people to be on the same platform, whether your distributors, your vendors, a third-party accountant, auditor, whatever it is, everybody is looking at the same information, right? And that's what we are trying to create, a network where people can log in, and you can have a vendor join, you can have a distributor join, they can have different views of different data, different access, kind of levels, and so on. So this is kind of where we are trying to go over a period of time, and this is where we believe eventually Indian businesses will all head to. It will take a little bit of getting used to, but once you get used to it, in our opinion, the old way of doing things will start to look very antiquated, right? And this is the way kind of how our systems are designed. And I think there are more people who are, I would say, looking at doing things how we are doing, and happy to share like the schemas that we have, right? So you have your ERP and your accounting systems on one side. There are different way of connecting with the system. There are some people who deal with kind of Excel. There are other people who deal with kind of FTP kind of integrations. There are people who like very seamless API level, I would say, integrations. And then through our system, we take all of this, call it master data, right? And we help take it to whichever counterparty you need to interact with, right? You may need to interact with government authorities, you may need to interact with your vendors, banks, whatever it is. So that's what we do, right? We are creating data pipes, and we are creating a platform where you can come and send, and then also have a system of records, right? One of the problems that we can have sometimes is we submitted something to the government based on our base data, but what we finally submitted, right, like there's some guy who knows, but 10 other guys who don't know, right? So we keep a system of record of what you have submitted, right? And that becomes important from not just, I would say, traceability standpoint, but also from an auditability standpoint over a longer period of time. And if there's any questions, you can just respond much quicker. If you have a third party guy, you can tell them, hey, this is exactly what we did. If there's a litigation or whatever, right? So it becomes much easier for you to run your business, right? So this is our view. Like we said, like in the next 4 to 5 years, this is where businesses will evolve, right? Many of the business processes will move towards automation. I think many are already, but it will become much more extreme as digitization comes in. Um, I think AI-based surveillance, right, is becoming now we should completely expect, right, and therefore over a period of time, if you are making meaningful errors or there are some corners that are being cut for good or bad reasons, it will be very difficult to escape, and in our opinion, that will lead to some financial consequences as well, right? And over a period of time, we see kind of direct and indirect tax systems kind of coming together as well, right? Obviously, as I mentioned, the interactions between your vendors, distributor ecosystems, and you, the company, will come closer and closer, and uh, things will evolve. I know there are some people who use kind of vendor portals and so on right now, which are like designed in, I don't know, like late 90s, early 2000s, and so on. They again won't be able to keep pace, so you would probably want to relook at the stack at some point of time, right? And then obviously kind of the credit and supply chain also will start to get fused much closer, like it does in many other geographies overall, right? So in our opinion, being on cutting edge technology uh, helps you be 100% compliant, and it has started to move in a must have kind of a bucket. Obviously, it's a little bit self serving because we are in that business, but nevertheless, I mean, if you look at the problems that you're having and you think about modern day technology, that solutions that are around, you will see that it'll seem more like a solution than. And this is the general kind of journey that we have seen businesses take, right? So you, wherever you are today or wherever you were like yesterday, you go and you scale up your workforce. You then upgrade your workforce and get like better people in there. Then you bring like audit firms and whatnot, right? And then after everything fails, right, you end and you bring in smart technology, right? Because there is something within us, all of us, that keeps us away from embracing new things, right? I think the other way to think about this is just bypass, rush towards technology. Bring in a set of tools that allow you to solve many problems. You adopt, I would say, cutting edge technology today. It actually serves you for the next 10 years, much more nimbly. Otherwise, it just creates friction over a longer period of time, right? There are obviously kind of many companies. Actually, at this point of time, this number is like 3,000 odd companies, enterprises, large enterprises that use us across industries and sectors. We also, just so that you guys are aware, we there's a very large portion of economic data in the country that goes through our pipes in a very secure and I would say robust fashion. Things don't break, and we are probably number one SaaS company in this space by a very wide margin, and the kind of data, the kind of volume of data that we support here, and some of the largest Indian companies that I mentioned, I think for any of you who are looking for cloud solutions that are also very robust, would be very happy to kind of hear from. I won't go through all the awards that we have, but there's more than enough, right? And this is kind of how we look at things, right? So a bunch of things that we are making today are in what we call compliance cloud, right? A bunch of like cloud offerings in the compliance space, everything from GST to TDS to e-invoicing and whatnot, and then kind of this vendor kind of stuff that we are building today. Some of you may have seen some of the early looks on that, on both, I would say, tools as well as credit side. And then there is also the customer facing stuff that we have built. So that's it from my side. Happy to take any questions. But otherwise, good luck on your digital transformation journey, and let us know if we can help you. Thank you.
Okay, thank you, sir, for your time and presentation. Uh, let's open for Q&A. I will request people to please put up the questions in the chat window, or you can ask a question by unmuting. Okay, we do have one question from Manjula Mule asking question from digitization point of view. How do you see security challenges using tools, specifically compliance management tool at cloud platform through URL link, not on your own server?
Yeah, so I think it's a broader cloud discussion rather than necessarily compliance and so on. I think compliance. I think at this point of time, if you look at even ERPs, right, like they have become cloud, right? So at some level, what we are doing is we are taking a lot of precaution, right? When you are running a cloud company, this is like your number one topic on your mind, right? And there's a lot of checks. You can look at a lot of, there are audits, VAPT reports, and so on that you can request your compliance provider or your cloud provider for, and those are available, right? And this, I mean, I would say at this point of time, probably 8-10% of global trade has moved to cloud. There's enough checks and balances in place. And then fundamentally, once you adopt it, you actually realize how secure some of these cloud systems are compared to even the, I would say, on-prem systems that have huge security risk from their own standpoint, right? You don't even know what data is going where, right? Here you at least know everything, right? So it becomes easier to track. But I would agree broadly with Manjula's question. It is something that you need to be aware of, and you need to think through which provider, in your opinion, is most committed to keeping your data safe, or to keep their tools at a I would say at a cutting edge security kind of a level.
Okay. People, you can simply raise hands. We will unmute you and you can ask questions if you have for Rohit. Do we have more questions for Rohit? Okay, there is one question. It's agreeable to accept changes are inevitable both on policies and procedure. However, as you mentioned, it is not you should have, but it is you must have. Do you feel it is not squeezing the routines of MSME like smaller units to adhere to the filing, etc., on very much frequencies or at frequencies?
Yeah, I think firstly I have a lot of empathy, obviously, for MSMEs who have 10 other things going on. A lot of empathy for the frequency of filing, and I think government is trying to reduce the load, reduce the frequency. We have seen quarterly filings and so on coming. So I think government is doing it. It's a journey, right? But at some level, we can't control the government actions. We cannot control the rules that are being set around us, right? What we can do is, kind of just adapt to these rules and see how do we best adapt to these rules, right? The other perspective I would have, and we've
I'm not
seen
getting it. It's showing
some
me a screen.
some of these things, kind of happen in, since GST is the businesses, the MSMEs, right, that adapt to these systems quickly, right, actually get a lot more business from larger companies and the customers that they have. And so, in my opinion, it is a forced change, and nobody likes forced change. But if you embrace this, I think after 2 months, 3 months, 6 months, whatever it is, after you have gone through that change, you will see life becomes much better, right? At least that's what we have seen with so many of our customers. And that's when they come back to us and say, hey, you know what, like give me this as well, right? Whereas the first time they're using it, they obviously, it's no fun, right? Like change is no fun. Nobody wants change, but it helps them as well.
Okay, one last quick one. Ananda Ghosh, please go ahead. You can unmute and ask your questions, please, quickly.
To reach out to you, sir, for different cloud-based solutions. So, how to reach out to you? I think you are commercially providing solutions, correct? Because
that is correct. I will put out on the chat.
Just like my email ID as well. Um, and there are a couple of
हेडफोन लाया क्या कोई? मैडम हेडफोन है किसी के पास?
Can I ask everyone to be please be on mute? Okay, Ananda, don't worry. We will ensure that we introduce you to Rohit via email immediately after this event. And we will pass on your number also to Rohit so that he can get in touch with you. And Rohit details are already there in the chat. You can also take it from there. Oh, anyways, Rohit, thank you for your time and presentation. Really appreciate for the insights that you have given for the industry. Thank you all. And
Thank you so
people,
much, guys.
delegates, if you have any sort of queries for ClearTax and for Rohit, please reach out to Rohit. His email ID is there in the chat box, or you can reach out to UBS Forum. We will ensure that we introduce you to ClearTax people. Okay, thank
I
you.
think,
Okay,
I
let's
think
move.
Vijay Bharati's question has not been answered.
Yes, sir. I will request Rohit to answer Vijay Bharat on individual basis on chat window. Thank you, sir. Okay, let's move to the next presentation by Manoj Aggarwal, who is the Chief Finance Officer with GMR General Assets Limited. To give you a background, he has more than 2.5 decades of experience in strategic corporate finance accounts, financial planning, analysis, and banking operations. Prior joining GMR Group, he worked with JP Infratech, GKN, Driveline, TechuMesh, got sound exposure to MNCs rolling out best quality practices, entailing business excellence, Six Sigma, Lean Enterprise, and Kaizen. He has secured 3 national level certification, including ICAI National Award for Excellence in Cost Management in 2005, involved in transition of company to NBFCs and core investment group company. On that note, all to you, Manoj sir, for your presentation.
Good morning, ladies and gentlemen. This dear coordinator, can you upload my slides? PPT.
You want us to play your PPT, sir?
Yeah, I have already sent it to you.
Yeah, hold on, sir. Hold on. Shraddha, can you please, sir's Manoj Kumar sir's PPT, please?
Just allow me a moment. Is it visible now?
Yeah, it's visible. There you go, sir.
Yeah. Good morning once again, ladies and gentlemen. In this session of 20 minutes, we'll be discussing about what is the role of finance and what is it, what is technology, how it is evolved, and what is intelligent technology, and how are we doing it, how we are transforming finance function, and what is it we are getting out of this technology in terms of what are the benefits we are getting. First, let's see what are the expectations from the finance head. Next slide, please. Next slide, please.
Yes, sir. We're changing. Yes. Next slide, sir, Shraddha.
Yeah, next slide. Yeah, what is the role of CFO nowadays? With the emergence of COVID and high level of competition, role of finance function in the organization has evolved to the new dimensions. In addition to traditional role of managing end-to-end finance, presentation of financial statements, budgeting and planning, nowadays CFO is partnering with the business stakeholders. He's supporting business growth and predicting, forecasting economic benefits in the next span of business. What is it going to be? And they are managing and mitigating the risks. Next slide, please. What are the functions we are playing? What are the functions of finance? Next slide, please. There is a quick decision making of profitable investment, management of growth and prediction of profitability, management of board, investors, and other stakeholders for the financial perspective, effective liquidity management, cost optimization, management and mitigation of financial risk. Now, how the technology, how we can garner the technology in performing these functions in a quicker mode and error-free mode. So let us understand first what is the technology, how it has evolved. Next slide, please. Yeah, I'll take you through from the starting. When we have started our career, it was like manual financial accounting was there. Then we have slowly moved to standalone softwares like Tally. After that, ERP, there was a bunch of ERP. like SAP, Oracle, and now I think everybody is aware about that. Then later on, there are the bolt-on tools are available, business intelligence tools are available. That is like SAP, Power BI, Business Intelligence, Business Object, Oracle Hyperion, which is pulling in the data from the SAP directly and generating the reports or generating information, whatever management is requiring. But nowadays, a step ahead, intelligent technology has been evolving, and now people are adopting this. These basically these are the RPA and artificial intelligence, machine learning, and so on, so forth. Next slide, please. Yeah, the intelligent technology, if you see, there are 4 or 5 components how we are using. These are the fair blending, how we are doing, like hyper automation. What is hyper automation? This nowadays RPA is a buzzword, robotic process automations. Then robotic process are embedded with artificial intelligence, and with the help of machine learning, we are performing so many operations in the accounting function, which are really helpful. And nowadays, programming is also very simple. This is with a very low code and no code. Even the city users can perform that with the technical acumen. And there are workflows are available, SAP workflow, cloud computing services are there. Instead of going for our own server, we can share through the cloud. And there are like Microsoft Azure data factory. These type of cloud computing services are available in the market. Integrated SAP procurement platform like SAP Ariba, that is available. And again, if you see, like if you want to purchase the goods and with the experience of Amazon, so they are for industrial moglics like sites are also there, which are providing the services like Amazon to the industrial procurers. Next slide, please. So what are the key factors when we are adopting this intelligent technology? First is understand the bigger picture. Like if we are going to adopt it, so we have to understand, we have to have the security measures. If a particular bot is processing sensitive information, that then we should know, we should have the appropriate security control, like automation of business planning process. If we are doing that, that cannot be done quickly. It takes its own time, and it is a time bound and time sensitive project, wherein we should be sensitive about these characteristics of the particular implementing this technology. And then there is no fun of automating the legacy systems, legacy processes which are there in the organization so long. First, we have to refine what are the processes are really required as of today, and then try to automate that. And one of the most important factor is addressing the human concerns. So it is assumed generally that people are afraid of technology changes, but it is not that. We have to give the comfort to our manpower, our people, that we are protecting people and not the jobs. People has to be deployed for higher value and cognitive roles. Next is we should have a plan. Like hyper automation is there to stay. No, get back to that. We should have a plan. Hyper automation is here to stay. Whether we want to implement it across the organization or we want to go it through small projects, we should have a clear goals. If like larger organizations are having creating their own RP excellence centers, that we can do it. Take ownership of boards, basically. Like boards are performing. Ultimately, these are the programs and which are performing the actions which are they are supposed to perform. but still we have to take the ownership of that and we have to check that. Next slide, please. Transforming of the finance function, how we are transforming it. Number one, like a dynamic dashboard, what we have done is in our organization, we are having a dashboard which is giving on real time the information which is required, key performance indicators which are required by the different level, like from if ultimate group head want to see some thing, so his requirements are different. Business chairman's requirement may be different, and the persons who are operating at CEO or CFO level, their requirement may be different. In our case, what we have done is we identified 200 KPIs, and which are 10 were for our group chairman perspective, 40 from BCM perspective, what the 40 figures they can see and they want to see, and other. This way, we have implemented it through this data from SAP and other systems is dumped into a data lake on the cloud on a real-time basis, and these dashboards are generated. Next slide, please. Data lake. No, back. Go back, please. Yeah, data lake. Another now we are exploring. Still, we are exploring it. This data lake project, where we want to automate the prediction and forecasting with the help of data scientists and data analysts, sensitivity analysis for annual budgeting and other things that although nowadays we are doing it through Excel mode, this can be done. We are exploring it to automate it with the help of data lake project, wherein data scientists will be deployed and which can, with the emergence of statistical tools, with different type of statistical tools, they can project and predict scientifically for the future. Next, please. Yeah, this is basically one thing, intelligent robotic process automation. What is it? This robotic process automation is nothing. It is basically performing the regular repetitive type of exercises which can be done by digital worker. Or this robotic process automation can be divided into broadly two categories: digital worker and digital assistant. Digital assistant is a kind of a RPA which works with our instructions. It will perform some operations. Then we have human intervention is there. Human has to say, okay, now you go to next level of next step. Now you go to next step. Another way is we are having automatic digital worker. One program, one action has to be performed from initial stage to the end, and it will be executed directly by that particular system. So in our company, we are having, in our energy sector, we are having more than 40 companies, but for 25 companies, we are implementing this, like bank reconciliation, intercompany transactions reconciliation, corporate cost, whatever the corporate cost we are having, that allocation of that, which are the tedious process and repeated type of nature of exercises, which now being performed by these RPAs, leading employees for giving them the time for thinking and doing more constructive analysis and performance. Next. Business planning tool, like I have mentioned that BPC we are using, which is being used for present financial preparation also. From the SAP we are fetching the data and notes and other things, we are getting it through that only. All the notes and everything in a PDF form, we are getting all the financials generated through this tool. We are exploiting it. And BPC, again, we are using for budgeting, forecasting, and general financial planning as well. Next. Next slide, please. And again, we are exploring digitization of the documents of SAP and RPA catalog. Suppose a person want to understand, want to have, he is having some query and want to understand what how this action is performed and what are the particular what is the command he has to use for performing some action. So that chatbots equipped with the conversational artificial intelligence services takes query from the end user in that chat box. We'll put all the our query, what is exactly we want. Then this chatbot will activate another RPA for fetching relevant data from the catalog and documentation and provide us the answer. That's why we doesn't have to go do the efforts for searching and all the other things. We'll be getting the on the spot answer for the related queries. Next section, please. Yeah, now what is it as of today? Our at our group, our finance function is rolling on SAP enabled environment with bolt-on intelligent system like business intelligence, business object, and business planning tool, supported by intelligent robotic process and artificial intelligence, along with the machine learning and Azure Data Factory, what is for data lake. Next, please. Now we have implemented such technology and we have transitioning to the intelligent technology. What are the benefits we are getting out of it? That is the obvious question. Now we have started reaping out the benefits. Improved agility. Now our systems are generating quick and error-proof financials, forecasting and analytics, futuristic model, and like impairment modeling and other things with the more accuracy and with the less of time. So that is what we are getting, like insightful MIS. We are getting nowadays we have been able to get the information, not only get the information, but the cause and effect relationship also we are able to establish with the lesser time with the help of this BPC tool and group company. You can understand if we are managing with the more than 20 companies out of the 20, what we can see nowadays, what is the actual, what is communication cost group wide, what is my bank charges cost. So we can inference, and what is my consultancy cost, where we have analyzed that our consultancy cost say was very high as compared to the standard norms. So we got an insight that why consultancy costs are getting so high. Maybe due to this legal, maybe due to the ongoing project. So we can have decision on that, okay, how to reduce it. And again, timely financial results. Now it is the power. Earlier, when we used to have a struggle for performing our board meetings in the next month's second half. Now with the utilization and exploitation of the intelligent technology, we are ready for the board meetings even on the 10th of the next year, next month. Governance, there is a robust governance wherein now manipulation chances are very less in any organization when you are using this automatic tools. So you cannot do the back entries, backdated entries. You cannot do that any type of manipulation because everything is recorded in the system. Next slide, please. These are all is resulting in the boosted confidence of overseas investors. This advantage, what it is giving us the leading, this particularly confidence, boosted confidence of overseas investors is leading us to advantageous bargain edge, quick and faster publication of financial results through hyper automation enabled system they are getting. So everybody knows that when your systems are automated, so then confidence increases. Reduce time and error, like repetitive type of works are reduced and employees are free for more analysis, and that way we are getting the benefits out of it. Improved employee experience. Employees are now enabled to reduce attrition rate. Hyper automation liberates employee from tedious repetitive works and enable them to focus on high value and cognitive tasks. The employees are really enjoying that, and it is leading to attrition, reduction in attrition rate. Again, improved supplier experience, like suppliers when we are using this online portal, Pariba. Now suppliers are getting all the information through that system only. They need the manual intervention is not required. They need not to call us, our procurement person. They can see the status of their invoice. What is the status? How their when they are submitting their codes, how their codes are translated, whether agreement internal approvals has been done, what is the stage, at what stage their invoice is there, and what time they are able to get their payment. That type of things where now suppliers are getting the experience, better experience, and again this leads to better perception about the group and giving us the advantageous bargain edge. Next, please. Yeah. Thank you. I want to conclude this with the quote of Bill Gates, who has said, like, success today requires the agility and drive to constantly rethink, reinvigorate, react, and reinvent. Any other thing you want? That's it from my side.
Can you name some BPC tool, Mr. Manoj?
Thank you, sir, for your time and presentation. Can I request everyone to please be on mute, please? Okay. Do we have questions for Manoj, sir? Acha, there is one question, Manoj, sir. Would you suggest Zoho books in place of Tally? I don't know. That's a vendor presentation question, sir. So, Chandrasekhar, sir, can you ask offline to Manoj, sir, because what we call asking what we call competitor vendors, it will not be right because Zoho is not here present. So we'll ask Chandrasekhar sir to request to ask Manoj sir on one-on-one basis.
Yeah, that's fine, I think.
Mr. Manoj, can you name some BPC tool, business planning tool used by you?
Yeah, that is what we are using. It is from SAP.
Okay, thank you.
Okay. Thank you, sir. We do have comments for you. Fantastic presentation and great content, Manoj, sir. What we call really appreciate for your time and the insights that you have shared with the industry, sir. Thank you, sir, for your time and presentation, sir.
Thank you.
Okay, let's move to our next presentation by Divya Kumar, who is the Group Digital CFO with IKEA Group. To give a background, she has more than 22 years of experience in strategy, finance, digital analytics, and is a certified independent board director and has worked in various industries across US, Europe, and India. Currently an Indian board member, she steers the expansion of Digital Hub in India. Also, she leads acquisition, partnership, information security, and data privacy decision analytics globally for IKEA. On that note, all to you, Divya, for your presentation.
Thank you very much. I'm very happy to be here today, and I will share a bit of a presentation. But before that, for those of you who are not very familiar with IKEA, it is a 78-year-old organization which is across 50 countries and with 400 plus stores. They're one of the leaders in furniture and home furnishing. And I work there as the global CFO for digital. And if I were to just explain a little bit what is digital so that you understand the perspective from which I'm coming, digital is basically all the technology development across the globe, as well as it is all the digital channels, so enabling of the e-commerce channel, apps, and so on across the entire spectrum, as well as the data and analytics. And it's a very interesting role because as the CFO, very plugged into the entire digital journeys, data analytics journeys. And I've also been very lucky in my career because I was the chief data and analytics officer also of IKEA some time back, and it was fantastic. I have been in analytics in Capgemini before, and This is a really good combination because it really combines the finance and analytics. About 15 years back in my life, I realized that, finance, I mean, I was a complete finance professional, and I realized finance is going to be so driven by both technology and analytics. So I made a conscious effort in this time to actually be in roles that are at the cusp pretty much of all these three, functions together. So with that perspective as to where I'm coming from, let me jump directly into the presentation. So today I'm going to talk to you about how do we know our business with data and analytics, but from a finance perspective, because after all, here we are finance professionals. I firmly believe that a new era has really begun where the functional silos that we used to have in the past have really got blurred.
Yesterday.
Sorry, can you see my presentation?
The given letterhead I have given to you. See.
Yes, we can see your presentation. Can I request others to please be on mute? Yes, ma'am, please continue. We can see your presentation.
Thank you. So I really think that a new era has begun, and why I feel that is that I think all the functional lines we had in the past have really blurred very much. Previously, there used to be, a finance used to be, yes, we used to be completely plugged into the entire organization, but we had certain roles and responsibilities, and you've heard a lot today about how that has evolved, how that has changed, and how these lines have really blurred. But I also think that especially when it comes to data and analytics, it has changed. Once upon a time, data and analytics used to be the mandate of the finance function a very long time back. And the finance function used to always have the most data in the organization. That has really changed with data and analytics being a function of its own, it being, it having fleshed out in a way that you need data science, you need, because of the explosion, the volume, velocity, everything of data has changed. And for that, you need different tools. So technology has changed completely. The kind of data has changed completely, and we really need a new culture in the organization that really ties in finance, data, analytics, everything into one seamless way that can really enable business steering. So with that, I'm going to talk to you about three parts of this today. One is about business steering, second is about predictive modeling, and third is about risk mitigation. And my focus is going to be as to how finance, data, and analytics come together in these three spheres and areas. I'm sorry, I have a little bit of a bad throat, so if I, if there's any issue in the middle, sorry about that. So if I jump into business steering here, we are a retail company, right? And I have been in Capgemini, I was dealing with different industries, across. At the end of it, it all starts with the customer. In IKEA, everything starts with the customer. And everything is about the customer, because at the end of the day, they're the center of our entire business. And if you look at that entire customer spectrum, that is where the data explosion has really happened, be it in social media channels, be it inside your organization also, because the number of touch points of the customer have increased tremendously. So whether they're digital channels, physical channels, how do you really tie that entire thing together? Customer analytics is very, very quite mature, right, in the market. But what I do want to point out here is that as we're doing huge customer analytics, you're looking at customer behavior, you're looking at how they shop across channels, you're looking at, where do they research, where do they buy, where do they compare, where do they really do things. This is very important to finance. Because at the end of the day, the way that we determine revenue, the way that we determine profitability has been a little bit in silos in the past, right? We say here is the store profitability, here is the e-com profitability, but all those lines have blurred because I, as a customer, and I personally may go research online, but I may go buy in the store. I may decide what I want, go pick it up in the store. I may actually go to the store, surf around, look, think about it a little bit, buy it online, right? Or it could even go back and forth 5 times before that decision is made. How do you attribute that cost? How do you attribute that revenue to the right channels? And why is it even important to attribute? It's important to attribute because we have to know where does the customer come for different things so that our cost and revenue can actually follow the customer behavior in the right manner. Where do you really do your marketing? How do you do your marketing? How do you personalize for the customer? Does it really Even, does the customer even like personalization or not? And all these are really important things for us to determine how much investment should be really placed there, how much, revenue comes out of each one of these initiatives that we do. Attribution models in data science have become very advanced. So not just you have customer analytics, marketing analytics, you also have fantastic attribution model based on different, statistical techniques. And but we need to understand them as finance professionals, because if we do not do that in the right manner, then we cannot really determine how to invest or how to, determine our profitability in the right manner. The same follows for costs, right? Because, and the biggest cost in any retail consumer products, most of these is really our fulfillment. And how do you really fulfill? Here again, the type of fulfillment has changed drastically. So it is no longer about you store inventory in certain places, it goes from one place to another. There are huge algorithms, fantastic algorithms, right? That have a combination of availability, cost, profitability, speed, as to how fast can it get to the customer, or what will the customer experience be depending on where it is delivered from. And different weightages are given to each of these different factors to really do your fulfillment in your order orchestration and so on. If we as finance professionals do not lean in and firstly determine what is the data that has to go in there for cost and profitability, and secondly, how are these algorithms really working in order to take away as to, is this the right way of doing this or not? And how should those algorithms be changed? We need to have a huge voice in influencing those algorithms so that we get the right profitability and of course everything else like the revenue, customer experience, etc., from those algorithms which determine cost. We can really optimize cost with these algorithms. So I have really found that so much of where you store inventory, how can you really fulfill in different ways, how can your cost reduce in your fulfillment, can be really determined with this kind of the right data and the right data science and algorithms applied to it. And then of course new opportunities that we can explore, and the external data versus internal data together can really determine what you really invest in the future for new opportunities. So on business steering, I want to leave you with a thought that data-driven decision-making is something finance can really steer in the organization, but only if we lean in and understand the data science behind each of these different things. And here, these are just examples. There are another, I'm sure, 10, 15 more, but I just picked the ones that are top of mind. Go into predictive modeling. Predictive modeling has changed drastically. It was always, for many years now, it's been statistical in nature, but with the introduction of very many advanced tools and technology to actually take those statistics to the next level, and of course your AI and machine learning, this has really changed. Forecasting, sales forecasting, inventory forecasting, fulfillment forecasting, supply chain forecasting. There is so much to it that previously used to be done in a very different way. And this has really changed now in the way that it is done. There is a lot of AI and machine learning now that is coming into forecasting models in order to determine where do we keep the inventory at what time, how do we really forecast, what does the next 2 months look like, 6 months look like, and so on and so forth. It is very important for us to understand these models and for us to really be one of the biggest stakeholders in determining how they are. For the simple reason that machine learning, and I know we had a session earlier in the day on how machine learning works, etc. But the fact is, everything garbage in is garbage out, right? Data in has to be really good for the data out to be really good and for your forecasting to be really good. The way machine learning works is that every bit of data that is added, the machine learns from that data, learns from the outcomes of that data. And if you look at something as much of an outlier as COVID, or even smaller outliers in your business, every one of those will then start to impact your forecasting in a very different way. Previously, we used to take these out manually. Now it is so much more difficult because of the explosion of data and the way these algorithms work to take these out in a very simple manner. So it is really important that we understand how the forecasting works. We also understand where to take out what. When do we use these models in the right manner? When do we rely on them? When do we not rely on them? I think both are equally important. And to what extent do we rely on them? Where do we need to exercise our judgment in a really good manner? Scenario planning has again changed completely. We as finance people love what if analysis, right? We do every kind of what if analysis, to plan for cash flows, to plan for everything that we can. But the point I want to really highlight here is that thanks to data explosion, analytics explosion, and technology explosion, we are able to test and learn a lot in scenario planning. So previously, we used to always look at 3-year ROIs, 6 years ROIs, 10-year ROIs, depending on what you're doing. But now it is actually possible to twist these around very fast, to be very agile in the way that we do scenario planning. Because beat the test and learn things in the technology and product landscape with the whole agile development, where you can actually test with the customer, test with co-workers, try to find out what happens when you launch something before you actually go and launch it. Can really help you change what you're doing, can help you reshuffle your investment, can help in tweaking that product to make it really feasible. Course corrections are possible. Important thing is, how do you encourage the culture of this? Because you need to de-risk our investments, and in order to de-risk investments, it's good for the entire organization to actually be in this test and try and learn mode, so that we know at every stage, where do we pull back, where do we go full steam ahead and invest everything we can into a certain thing. And then take the next one, which is investment, leading very much from it. And I'll give you a very classic example on this one. We launch new stores, big stores, as some of you know, IKEA stores are really huge. We're also coming out with smaller formats. We're coming out with pickup points, so on. How do you know where to place it? What to do? Is it better to place it in this locality or this locality? Does it actually make sense placing it or not? And now data science has really had fantastic, I would say, progression in these areas, because you can model out saying, if you place something in this area versus this area, what happens to your entire geographical, how does it impact the other stores? How does it impact e-commerce? How does it, does it actually help in the overall market improvement, or does it actually take away from the market if you do that? And so this is just one example, but I think a lot of investments can also really gain a lot from, data and analytics. And of course, our favorite topic, which is the budgets. And I think the yearly budgets are really, something that needs to be shifted across, because it doesn't work as well anymore. As I was saying, with the test and learn, you always know kind of where to shift your investments, what to do. And with that, you can't be really stuck on budgets. So I would say, let's use the data, use the analytics to keep our budgets always on. So leaving you with the thought that, data-driven planning, analytics-driven planning can be really very effective for us. Going to risk mitigation, and I will spend slightly lesser time on this because it's such a huge area and highly, I would say, complex. But what I want to focus on here is very much about outliers, anomalies, frauds. We, both for detection of fraud as well as of prevention of fraud, now risk analytics has really become pretty mature, right? You can really find the anomalies before they appear. There are certain patterns that emerge, and how can you look at those patterns that can show you before something major really happens? And of course, also, if something major happens, then what has happened? And I can give you many real life examples, but this has really changed the way I think that we can really mitigate risk. Same way on the audits, external audit, as all of you I'm sure are aware, all the big four are now going into a little more data-driven audits, right, where they are using their own tools to find these outliers. How can we as CFOs already do this before they come in, right? I mean, how do internal audits, how can they benefit by these kind of tools and technology and analytics? We already spoke about de-risking decisions. I will not go there, but I will spend a bit of time instead on the risk. The more that we have data in the organization, with the explosion, with the velocity, with everything that's happening on data, the more we rely on data, we do need to be aware of the risk of doing that. I have spent many years in the data field, and we all know that data is not always accurate. Data is not always reliable. And data, the way it flows from system to system, can get either diluted or it can get morphed into something different, which makes it really important for us to recognize that risk, to table that risk, and to mitigate that risk. all these data science models that I've been telling you about the past are really about having good data. If we don't have good data, the risk in we are actually making wrong decisions then with the data and the algorithms that we're putting on top of that data. The more data we have, privacy, and I also lead information security data privacy for my, globally for my company. And the amount of risk we have with the data is always in any big company really high. How do you lock up that data? How do you make sure as you're using it for all these things, you're not compromising at any point the privacy of the customer, the privacy of the coworker, right? Or any kind of, I would say fraudulent interventions with that data. So just wanted to highlight that as a big risk, and risk management, I think, can also become, can hugely benefit from data and analytics. That some essentials, right? I think as a CFO, to me, data foundation has started becoming very critical. Understanding where our data sits, understanding how that architecture is, how that foundation is, how do we make that data flow from system to system, actually de-risks what we're talking about in the previous slide, right? It is really important that we have a strong data foundation, that we understand the data foundation enough as the finance community and as the CFOs, so that we can make the right decisions. Where do we use the data in the right manner? Where do we actually stay away till we have good data? How do we make decisions? Even if algorithms are throwing up something, do we really rely on them? Do we not rely on them? And how much do we rely on them? I won't say not rely, but how much do we rely? And what facets do we rely? Where do we take it with a pinch of salt? We have fantastic opportunity in blending external and internal data now. With all the explosion happening everywhere, how do we then invest and think about the right tools, technology, and skill set to actually of people who can combine this data to tell the right story always about what is happening externally combined with what is happening internally? Analytical skill set. I truly believe that the finance community and my entire team, all the finance teams, have to understand more of analytics, have to understand more of statistics, and have to understand more of the tools and technology needed in artificial intelligence, in machine learning. They don't need to become data scientists, right? But at the same time, how can we lean in to understand more and more so that, again, we know what is happening, we know how to make decisions based on it, we can steer the organization based on that. And having a data driven culture, I strongly feel that we are the steward as the and the evangelist in the organization to really create a data driven culture in the entire organization. Finance has always done that, but now it needs to, I think, step up quite a few levels, because if we're able to use all this analytics, all this data to actually steer every forum, every committee, every management team that we are in, to say that let's not make decisions based on non-factual information. We have these algorithms, we have these tools, and how can we use them to the best of our ability to then drive our decisions and test and learn from those decisions, to say let's make this decision, but let's check a week later what happened, right? And let's get the right data for it. Let's check 2 weeks later what happened. Let's form these algorithms to really help us there. And I think it can really change the way that we interact with the rest of the organization, as well as how the organization really, blends the finance aspect of it with the rest of the business. So that's what I had for today. With that, I thank you for listening in, and open to any questions.
Thank you, Divya, for the time and the insights. Okay, questions for Divya. I will request people to please put up the questions in the chat window, or they can raise their hand and we can allow them to unmute and ask questions. Do we have questions for Divya, delegates?
I see one hand raised.
Yeah. Hi, Divya. This is Inderjeet. Yes, actually, it's a very nice presentation. So, Divya, we are also doing digital transformation in our company. And the one most formative challenge we are facing is that data sits and resides in every department. So, being a sales, they have their own MIS guys who is fetching out data. In marketing, they have their own MIS guys fetching out data, and so on with other departments as well. So now, as a as a universal, if you talk about effective data management, so what you suggest that data should be centrally reside and the data provider should also be centrally reside under the umbrella of finance?
There are many ways to do this. I personally am not a believer in centralization of data. And the reason why I say that is that data has exploded so much, it cannot be one, having the finance team take care of it. I mean, data has actually become something technical in nature. So you need a very strong data architecture team to actually take care of that data rather than the finance team. However, what I firmly believe in is a concept called data mesh, and it would be, I mean, you can read up on it, which is basically about data may reside in different places. There's no need to pull it all together and have it in one place because that also increases all the server space and everything else you're talking about. But there is a mesh in the data you can actually create so that you can go and use that data whenever you need to, and you always have visibility. So to me, finance team doesn't need to own all the data, but they need to have visibility of all the data, and they need to be able to tap into any data they need at any time for any purpose. So this can really be a good way to do it rather than actually centralizing everything that can take years. It can also be quite cumbersome and need a lot of heavy lifting in servers and so on and so forth.
Okay. And so in this way, I think we need to have an experts in every department to fetch out data and to populate with for the respective department.
Yes, but if you actually follow the data mesh concept, you can actually have a tool and a system. So the way that you build your architecture then is that you can actually take the data from different places. So you don't really need to have a Spock in every department that says, here is the data, but technologically you can access that in any way you can because of the way that it is set up.
Okay, got it. Thank you so much.
Hi Divya. This is Naresh. First of all, congratulations. It was a good presentation. Nice content. Thank you. So Divya, we have a combination of people now. Classically, finance function is growing and it's changing continuously. So the demographic, okay, we have a mix of is experienced people. We have young generation, okay. And now, how do you advise that in those cases to make our people ready for this new change, that adapting to the new data analytic techniques, upskilling them? So if you have any insight on that part.
Sure. And great question, because this is a challenge we all face, right? I think it's a combination of mindset and skill set. I think there are people in the organization where it is tough to upskill on technical skills or, actual data science skills. But if their mindset is open, I find that they get everything, if you know what I mean. They really absorb, they really know what is happening with it, and that is enough sometimes, to be able to make the right judgment call. But as we're building up new teams, right, for most really, I would say, youngsters that we recruit, etc., I'm a big believer also in having academies. So you train everybody, and there are different levels of training. Some people may go all the way to train into data science, or some people it may be about learning what exists out there. And for some people, like I said, it's more about understanding what they do with what exists out there. And those could be actually three different levels of training that you undergo in your finance team that can actually get them to to upskill. And I agree with you, it may not be 100% getting into everything, but you can have different levels, I think.
Thank you. Thank you so much. Yeah.
Thank you, Divya, for your time and presentation. Really appreciate for the insights, and people are sharing their views. Fantastic presentation, and they are happy to listen to you. Thank you, Divya. Thank you.
Thank you for having me, and have a great day. Bye.
Yes, yes. Okay, let's move to our next presentation. Now, before I may move to the next presentation, there is an announcement, right? We will be coming out for our physical conference for the CFOs and head of finance in the month of Feb, right, with awards. So we will form a very strong jury, and what we like to recognize people for the fantastic work that they have done in the organization or for the industry. We will have different nominations coming up. So I will request all of you to please fill out the nominations once we come out with the physical announcement. And people who have participated today, there will be additional discounts and that coupon will be shared with you. So when you people are enrolling, you can use that coupon code for physical enrollment and get a great discount. So that will come up in the month of Feb in Mumbai. So we'll keep you posted for that. And with that, let's move to our next presentation. That will be by Kallol Kundu, who is the Executive VP and Group CFO with the Oberoi Group. To give you a background, he has more than 25 years of total experience, including 11 years in C-level financial role as Group CFO, President Risk and Audit Assurance, and Chief Internal Auditor. His experience transverse numbers of industries, including power generation, transmission, distribution, EPC, construction, real estate, FMCG, although his longest stint is in the hospitality industry, where he has devoted 18 of his 25 years professional years. He has well-rounded experience in core finance, treasury, fundraising, business strategy, business restructuring, financial planning and analysis, accounts finalization and financial reporting, risk management, internal audit, and fraud investigation. He has led major IT system implementation, including SAP, and is accredited with creation of Center of Excellence at the Oberoi Group. On that note, all to you, Kallol sir, for your presentation.
Thank you so much for the very generous introduction. And good morning to all of you. It's really good to see such a packed house, I would say. I of course also have a presentation, a PowerPoint presentation to share, but I think more important than that is to share my ideas and experience on what I feel on the topic of automation of finance. And I do agree, I also happened to hear the presentation of Divya, and I think it was a very well articulated and very comprehensive presentation, so to say. My topic for the day, of course, is a much more narrower topic, and maybe on some other day we can have discussions about many other areas that probably one could talk about. But for today, I'll limit myself to the topic that has been handed to me, which is basically achieving automation in the finance function. So, I would like to begin by saying that we hopefully, I think, are just coming out of the pandemic. And we've seen 1.5 years of complete mayhem, if I may use that word. Business has been generally bruised, battered, and therefore, whatever I'm probably going to speak for the next 10-15 minutes will be a reflection of this last 1.5 years. Almost all businesses have been affected, but particularly the industry that I am in, luxury hospitality, is one that has probably faced the worst crisis. At least in my career, this is the worst crisis. I mean, as a professional, I've seen 9/11. In this industry, I've seen 26/11. I've seen the recession and all of that, but I think this was by far the worst. So when this really kicked off, there were two imperatives that happened on March the 24th of last year. First was just before that, where we suddenly saw, businesses plummeting, and it was a sharp drive. March is one of our best months, and really speaking, we were quite shocked as to what was happening, although it was happening around the world, and especially in China and all. But we were really shocked as to what was happening. A large part of our business is also from international tourists and guests, and really it hit us hard. So the first thing, two things really we had to do in a hurry. One was to quickly shift to a model where this whole working from home, etc., had to be put into place, because hotels, as you know, they are 24/7 operations for 365 days a year, and therefore there was no way how anything could stop. Albeit, there was very little guests, etc. But whoever was there, I mean, we had to service them. And it was even more difficult because we couldn't get purchases couldn't happen properly. Procurement was, supply chains were in a crisis, and delivering to the customer was a real problem. So one was that the technology piece, and we've introduced this center of excellence just in the nick of time. I mean, we started this exercise in 2019 sometime, and we completed the implementation in just about February this year, and this really helped us. Now, what we immediately did was to jump into, trying to first save liquidity for the company. I mean, I think finance became paramount during this period to make sure that the company doesn't run out of cash. Now, in order to do that, the most immediate and important thing was to move into a system of rolling forecast, which we already had, but the management of that became even more dynamic. And therefore, we had to ensure that, and it was very difficult to predict business, as you all know, during this period. So we had to project, we had to see what our revenues would be. We had to see what our collections would be, because that was also a problem. Many offices, many companies, most companies were closed during the pandemic. And therefore, people who wanted to really, even guests and companies or corporates who wanted to pay could not go to their offices to make payments, etc. So that was one big challenge that we had. On top of that, the expenditure still continues. So it was really very difficult for us to manage that. And I must say that here, automation really, we saw the benefits of what automation can do. I mean, and I'll tell you with the objective, the end objective in mind. At the end of the day, we predicted that, or we forecasted that this is going to be our debt levels. We are generally a low debt company. But we predicted that this is what we are going to be. And thanks to the whole automation effort, and not only automation, but business transformation, I would say, we were able to, stick to that and thankfully come out of it. I think really speaking, the business owes a lot to the finance function for the kind of thing that we could do in this presentation. But anyway, I'll actually share a short presentation that I have. Just give me a second, please. I hope my presentation is visible. So as I mentioned that, for today's topic, I have narrowed down to the technicals. So there will be, I'll cover the areas which are relatively, limited only to finance and the way things are managed. So the first thing that we had in hand, which really helped us, was a dashboard that we have. Now, this dashboard really gives the CFO and other important executives of the company. This is linked to all systems that we have across the organization. And at any point of time, I know exactly a lot of these matrices, the KPIs and all of that we have across the organization, whether it's related to occupancy, average room rate, revenue per available room, etc. So on one side, the micro level information, on the other side, the macro level information, which is also, really speaking, the returns from various business units or various hotels or various kinds of businesses. And effectively, on a longer term basis, even, things like return on equity, return on capital employed, and all of that. So all of that is visible on a dashboard. And of course, there are many such tools available. You can use any of them. We spent the last couple of years to really build up this to make sure that at any point of time, if there's anything, then that should come to the notice of the CFO. The second is, I'll talk about specific functions, as I said, finalization of accounts. Now, this used to be in our organization, and like in many other organizations, pretty much the end game of finalization used to be pretty much a manual exercise and a sort of an Excel based exercise. Although we have work on SAP, for a long time, but we have a lot of entities which are outside across the globe, where in many countries, there are different kinds of requirement, different systems. Some of them are in not in SAP and all of that. So finalization of accounts was always had a lot of manual interventions, is what I would say. What we did was we created something called a closing cockpit. I'll just show a view of this. Of course, this wouldn't mean much except for those who have worked on SAP. So this really tells you this is a series of steps which are required for financial closing, and many of them are generated on their own. At the month end or the period end and all of that. So creating provisions, etc., and all of that. Depending, it picks up data from various places and it does on its own. And the wherever it shows a green light, it shows that that process is over. Wherever there's nothing out here, there's no either nothing or there's a red light that comes there. So this was really has been useful for us because especially when people are working in different places from different places, everybody having the whole finance closing team having the single view across working from anywhere, it's really useful to make sure that our closing is perfectly fine. We also moved to a method of auto consolidation from the manual days. So today, really speaking, there is very little intervention that is required manually because all of the systems have been integrated into our finalization exercise, and it's all auto consolidated. A lot of benefits, like I mentioned in my opening remarks, came to us from Treasury, because Treasury became one of the pivotal functions in this particular period. So here again, availability of manpower, etc., was one issue, which has always been an issue. But here we had already deployed robotic processes, or bots as we call them, to post entries right up to the level of SAP. So what really happens is, let's say a customer pays to us, or a guest pays to us, or a corporate pays to us. They pay by, let's say, using a virtual account number. We have a host-to-host protocol with our bankers. And the moment that the payment hits with the virtual account number, there is a bot that pulls that entry and automatically posts that into the ledger account of that particular customer. And only exceptions that remain are really handled by somebody else. So this is pretty much a seamless process. This gives people in Treasury or finance professionals in Treasury much more time to really work on, the business of Treasury more than the accounting and the other aspects of Treasury. So, which brings us to the next point is, there again, we have a consolidated dashboard where the head of the Treasury has access to all the bank accounts across the globe in one single screen. So therefore, anything that needs to be monitored or done is all done through this. And obviously, this needed, basically, I heard the terminology of data mesh. What we use here is a data lake, and basically it's spread out across the organization in various places, but it's all integrated into the center of excellence, like we call it. The whole function of Treasury, I mean, there's not a single check that we sign today, and I'm sure many organizations do the same. Every single paper today is on document management system. So therefore, retrieval of documents, etc., is completely seamless, completely paperless. In fact, if I could show around my table to you, you would see here that there's no paper on my table at all. Management of investments, another very important function for us, and we, in many of our companies, many of the entities within our group are debt-free companies, and we have surplus money to invest. So the question that often comes is, how efficient is our investment mechanism, and are we selecting the right? So the way the system has been built today is to say that there is a board approval that we have on what are the range of, or the kinds of investments that we can do, and those logic are all fed into the system. The system on its own goes out and pulls information on various returns, etc., of various investments, and as a result of that provides comfort to the person who's handling this, that he or she is making the right investment decision. I have covered supply chain also because this is intricately linked to finance in most areas. At least there's a functional relationship between the two, if not an administrative relationship. So the first thing that's of extreme relevance, I think, in today's world is the concept of blockchain. For us, especially so for our organization, because for us, quality is paramount. And when we talk of quality, we need to make sure that what we provide to our guests, what we stand for, is absolutely the best, that can be provided. I mean, we are delighted that our customers and our guests rate us amongst the best resorts in the world as a best chain. Sorry, was there somebody asking any question? Okay, so blockchain is extremely important to help us to trace products, including things like perishables, for instance, coming from some other country, let's say from Japan, or cheese from Italy or whatever else. So it really helps us to do that. And not only that, I'm sure most of you understand how blockchain operates. So it's basically a distributed ledger, which has, which is basically a trusted kind of network. And this also helps us in our accounting straight away, basically. I mean, it's not fully implemented as yet, but the vision is that this will completely, help us automate our transactions. This is also reflect, on the audit of it, because I mean, I personally have a lot of experience in the auditing side also. I think this is also one of the technologies that's going to help auditors to minimize their transaction checking, because the system itself is so robust that they can spend more time on the decisions and evaluating decisions rather than checking the transactions. So blockchain is a very important piece. Picking up market intelligence in a supply chain is very extremely relevant. By market intelligence, I mean automated information through RSS feeds from the MCX, which is the Commodities Stock Exchange in India, or any other stock exchange, commodity stock exchange in the world. Or it could be even, picking up published data from mandis, for example. So that's another very important piece which reflects. And you would see, as I explained this, when you talk about automation in finance, it's not just limited to finance. It actually affects every angle. It affects sales and marketing. It affects procurement. It affects human resources and all of that. We've got now a system of eRFQs. So basically, any vendor coordination that happens is through an E mode. I mean, of course, the government really is very proactive on this, and I'm sure many other private enterprises too. But this is again something that our vendors feel very comfortable with. We have a very transparent system of e-auction, whereby you really can, figure out, you can cultivate new vendors, new people who can transparently come in, and really the process is transparent. So, a lot of checks and balances that used to be required in the earlier days, really speaking, are not required, because if it goes through the e-auction process. And finally, consolidation for economies of scale, which means supply chain, our hotels are and resorts are spread all across the globe, and definitely in India also. So if I speak of even India, for example, procurements that happen, then these are all similar procurements across various cities. Now, when there was a time when each individual hotel used to do their own negotiations, they used to do their own procurements and all of that. This tool now today helps us to consolidate the requirements across. So again, the person who's responsible for this in our corporate central purchase is able to view the requirements across hotels, across resorts, and are able to consolidate requirements and achieve the benefits of economies of scale. Coming to some of the other aspects of finance, payables, there's something, maybe I'll just show you an engine that has been created here. So it starts with the document, again, accounts payable, like I mentioned earlier, for treasury. is also driven by complete document management system. We have a vendor portal where vendors can really, the moment the supply happens, they can submit their invoices and all of that based on the PO. In fact, they can just flip the PO and convert that into an invoice if they wish to. So, and then there's of course storage and all of that. So based on the documents that come in for payment, these are all, every single invoice that is paid in our organization goes through an optical character reader, which automatically picks up various fields and populates that information for the purpose of payables, for making the payment and for accounting thereof. And there's a workflow engine related to it, which really takes care of the verification process, duplicity, approval flow, parking and posting in SAP, and so on and so forth. So this is really, it's a complete end-to-end automation process. Where this helps us really is to say with a fair degree of predictability that if I'm supposed to make a payment to my vendor in a particular credit period, within the particular credit period, then we will adhere to that. This is particularly important for MSMEs, and I'm sure all of you are aware, because there is a stipulation. The legal requirement is such that you have to make a payment, otherwise, that's a non-compliance. It really helps us, because the whole thing is not subject to manual decision making or for people's own likes and dislikes, and therefore I think this is one of the most important things. GST validations, another new thing for all of us since the last couple of years, and it's become seamless for us today to do any kind of the GST number that is mentioned on the invoice of the vendor. That is matched through the system, but I mean the system automatically matches it with the vendor master, and in case there's an error or something, it throws. So it just helps us that there are no cases of wrong entries getting into being made, and therefore people not being able to avail GST credits and stuff like that. So those issues do not arise at all because they are addressed in the first place itself. HR policies are inbuilt into the systems, especially for reimbursements, etc. So let's say it's, we have things called familiarization plan or something. These kind of policies, there's no need for any manual check. It's already there in the system, and if something needs to be done within the parameters of that, then it can be done only within that parameter. I mean, you can't do anything which is outside the system. And of course, real-time monitoring. We know which vendors are really speaking, getting delayed for payment, etc. Receivables, again, the same thing. Document management system. It is completely done. Meaning all documents are today managed on the DMS. There is invoices, there's the backup for the invoices, there's correspondences that could happen. Everything is there on the system. So therefore, tomorrow, if somebody says that I want to check, in fact, our auditors also, they don't really need to come and look at any paper sitting in their homes. They're also working from their homes, and subject to the IT security restrictions, they're able to access anything that they want to see directly on the system today. We have bots in receivables also for consolidation of invoices, for acknowledgements, for accounting of TDS receivables, and auto accounting based on payment advices. So payment advices come from our customers in different shapes and forms. You just need to train the bot to be able to pick up the information from there and to post them into the system. So that's one. And taxation, and I'm sure you all are familiar with the various forms that are needed to be there. So the system ensures that one form is linked to the other and there are no discrepancies in between. So it was really good for us to see that we've received acknowledgement of timely submission of returns, etc. from the government. Really helps us a lot on this and makes our system really very transparent. And finally, it's basically a complete paperless guest experience for our guests as well. If you walk into an Oberoi hotel today, it's completely contactless. Check-in is contactless. If you eat at a restaurant, you don't have to touch anywhere. And all of this, whatever happens, is all directly integrated. I think the more important process, the change that has happened or the transformation that has happened in our organization is that there used to be one point of time in the hotel industry. If anybody of you are from this industry, you would know that there are things like, there used to be concepts like night auditor or an income auditor and all of that, where every single transaction used to be checked and all of that. But today, the whole mechanism, the moment a guest checks in, the folio really opens up automatically. And if there is an approval required within our system, which means, let's say the front office manager needs an approval from the general manager, then that approval automatically travels to the general manager without him having to, look at any piece of paper or, do anything on the system. It just comes on his mobile or is on his mobile device or his laptop or whatever, and he just approves it. So everything is on a pre-approval basis. So there's no need of checking whether it was properly approved or not. So that's a huge benefit that we have. And of course, for customers also, it's a really good experience, I would say. And of course, as we go forward, I'm sure this is going to evolve much more than this. So that's all I have for the presentation. And I think I have just run short of time. I would just end by saying one thing. I think Divya mentioned, the concept of what if. We have actually, in our organization, moved a little from what if. What if analysis was always known. We have moved to a so what analysis. So I leave it to all of you as food for thought. What would be the difference between a what if and a so what? And of course, I can tell you from my experience that this has really changed our ability to make better decisions across the organization. So thank you for your patient listening in, and I'm happy to answer in case you have any questions.
Thank you, sir, for your time and the presentation you shared with us. In interest of time, I will request delegates if they have any questions to put it in the chat window, and I will request, sir, if you could answer them on individual basis, that will be great, sir.
Sure.
Thank you, sir. Thank you, sir. Okay, let's move to our panel discussion. For that, first, I would like to invite the panel moderator, Varun Gupta, Associate Director, Finance Controller from PepsiCo. To joining, we have Hemant Kalra, VP and RPA Practice Quality Kiosk. Sudhanshu Dang, Head SAP Financial and Business Accounting, Hero Fincorp Limited. Vishal Garg, Head of Finance and Control Services, India Market, Nokia Solution and Network. And Vidhan, Kedia, Head of Finance, Global Drug Development, India at Novartis. I will request all the panel members to please switch on their videos. On that note, all to you, Varun, to start off with your panel discussion.
Yeah, thank you. Hope I'm audible.
Yes, sir, you are audible.
Yeah. Good afternoon, everyone. Thanks for the great presentations by Anand, Rohit, Manoj, and Divya and Kallol. So these are very great insights. And this session, we are about to discuss the panelists with the great insight about how we can foolproof deployment of the RPA solution in our finance function. So we will share a couple of experiences from the panelists, and we'll ask a couple of questions to clarify what are the key strategies which could make our RPA deployment foolproof, right? With that, I would like to introduce the panelists. We have 4 panelists today. We have Hemant Karla from Quality Kiosk. We have Sudhanshu Dang from Hero Fincorp. We have Vishal Garg from Nokia Solutions and Network. And we have Vidhan Kedia from Novartis, India. Thank you, guys, for joining the panelists. And with that, I would open the floor for introduction. Hemant, if you can introduce yourself and your key journey around RPA.
Yeah, thank you. Thank you, Varun. Good afternoon, everybody. I hope I'm audible. So yes, I am currently running the RPA practice for Quality Kiosk. I'm sure you've seen the logo already. Quality Kiosk is out there from last 21 years, and they are the specialists and known for testing business, and of course now RPA being their baby from last 2 years. I am a veteran from the RP industry because it's been overall 17 years, and most of the time, at least the last decade, has been RPA. I've had previous experiences in organizations like Fidelity, Ericsson, and Axis Bank. At Quality Kiosk, we've been here in RPA for last couple of years, or maybe more than, in fact, more than that. And we are a 200 plus organized RPA setup already, supporting banking, finance, insurance, automobile, and other manufacturing units. So yes, thank you for this opportunity and looking forward for the next 20 minutes. Thank you, Varun.
Sudhanshu, would you like to introduce, please?
Yeah, thanks, Varun. Thanks. So, see, my name is Sudhanshu Dang. I'm chartered accountant with more than 17 years of experience. So I've been into corporate accounting, reporting, ERP implementation, IT governance, into other areas. So currently I'm working with Hero Fincorp Limited as head SAP Financials and business accounting. So in terms, as I said that I've been into say more of a techno functional guy. I've been into my core area is say finance only, but over a period of time, I've evolved mainly into IT related things now. So I've got multiple ERP implementation done. Specifically coming to the RPA part. So as we understand that most of the organizations since last 2 3 years, there is a quite a buzz on the RPA part. People are heavily investing now on the RPA piece. So similarly, we have also done some of the journey on RPA in terms of our customer operations part. But now we are exploring for some of the other functions also, specifically on accounts payable, wherein multiple repetitive tasks are happening.
That's great. That's
Thanks.
great.
Thanks.
So Vishal, would you like to introduce yourself, please?
Sure. Sure. Hi, good afternoon, everyone. My name is Vishal. I'm chartered accountant by qualification and having about 21 years of total experience. I'm now with Nokia for 17 years. I joined Nokia when it was a global giant in the handset business, but now we do more of infrastructure business and market leader in there. So as far as our digitization story, I mean, when I joined Nokia in 2004, it was already having a very high level of global systems and digitization, and we have now been doing that for 17 years. Uh, Most of our initiatives are global, so they are driven by our headquarters or by our larger offices in Europe, and they are done simultaneously across the globe. However, I've been change agent for many of with those large change programs on digitalization side and have my own experience of having these then. And as of now, we are again, we've acquired a very large company called Alcatel Lucent a couple of years back, and now been participating in integration of those very large SAP instances. So that's my experience. And on local side, we have done few local adaptation, for example, for the tax requirements or local books requirement, and that they have yielded us very good results. As you understand, in any multinational company, getting a head count is very difficult. So some of these have been by force, and some of these have been by choice, but the results have been phenomenal every time we've done it.
Great. That's great, Vishal. Thanks for the introduction. Vidhan, would you like to invite?
Sure. Thanks, Varun. I think firstly, a very good afternoon to everyone. And I think it's a pleasure to be part of this August audience today. Yeah. Myself, Vidhan, and I lead the finance function for the global drug development here at Novartis in India. I think in Novartis, I've heard the other panel members today. I think it was a pleasure to listen to all of them. And what I can share, Varun, from our side in terms of the Novartis journey within Novartis, I think digitization or the RPAs and the automation of various finance processes started almost a decade back. And today, if you were to say digital and finance are kind of intertwined and kind of have become the two facets of the same coin. So I heard the other panel members also speaking about as CFOs today we need to be tech savvy. I think mindset is very crucial, and I think Novartis as an organization has come a long way. At Novartis, as you know, it is one of the global leading plays in the pharma space when it comes to innovative medicines. And I think change has been one of the key culture agents, I think I would say, within the organization, and digitization is no island to that.
So from that perspective, I think finance has come a long way, and I look forward to the rich discussions we would have as part of this panel here, and looking forward to interacting with the entire group as well. Thank you.
Totally agree with you, all panelists. So the first question for the today is around the like the documentation processing, right? So considering the speed, the scale, and the artificial intelligence around deep learning. So this question is for Sudhanshu. So Sudhanshu, what is in your opinion would be the best technology or the process around document processing, and considering the speed and the scale which is available. And part of the second part of the question is how this efficiencies in the finance and accounts will be having a great impact on the enterprise, right? Overall enterprise if we see. So with that, Sudhanshu, the question is for you.
Yeah, thanks, Varun. Thanks, Varun, for raising this. So, say IDP, as we all understand now, the term intelligent document processing is a rapidly emerging technology which allows users to automatically extract data from, say, manual invoices or or any sort of documents into a machine readable format. So, it for an organization, it minimizes the work in terms of manually putting up those documents into the system, and copy pasting on information from one system to another, going through those documents line by line. So we understand that some of with these solution now this thing is coming up, but the major challenge which is coming up for specifically for large organization is that how to deploy a scalable solution. So as I understand based on my experience that, say, for an any such sorts of solution to be, say, really successful in the longer run, it should be scalable. And there could be 2 3 qualities which I would like to highlight, or 2 3 specific points which could be useful for this when we would be deciding on this part is, so that generally the solution should be, say, cloud native sort of a solution. So because it helps in terms of scalability and other parts, we understand that the cloud solution helps from that perspective. Then it should be a unified platform. When I say unified platform, the integration should be easy with the other application, because we understand it is not just about extracting the information. Point is that information should be getting directed to the right direction. Say in terms of, if we are working on an ERP, it should be posted into an ERP system. If we are talking about customer services applications, then it could be posted into, say, loan management system in NBFC, HFC, in insurance companies also, the claims processing. So there could be a number of example based on the industries. So the other area wherein, say, the business friendly artificial intelligence, when we talk about for these specific IDP sort of solution, so it should be ease of use for the users. So as per my understanding, I believe these are the 2 3 qualities which should be there. Scalability is really important. And to answer your
yeah, about the
yeah,
efficiencies around the entire enterprise.
so we understand that the FP&A leaders now needs to see, we understand in the initial morning discussion also, wherein some panelists were highlighting those things, that now over a period of time, finance leaders and CFOs roles have changed. Now, in terms of some of the basic functions which we initially thought of, which are being handled by, say, finance leaders, now those are changing. The CFOs, finance leaders need to really add to the business decision making. So with these sorts of, say, RPAs or, say, new solutions which are coming up, FP&A leaders are should be able to eliminate some sort of repetitive task, and the team should be able to focus on some high value strategic activities, and in a way this way they can really contribute to the business decision making.
That's great, Sudhanshu. So with that, we'll move to the another questions to Vishal. So Vishal, what is your thought process around how to advocate an automation to the organization CFO?
Sure. So as we've been discussing whole day and also then today's scenario, see, there were few conventional challenges before the CFO, say improving efficiency, reducing costs, generating numbers. But now what is the latest challenges have become like taking out the action oriented insights from the data. And there's a lot of data. We know that data is generated today at every point. And there's millions of data lines. So I think digitization can only be, or it is the biggest transformation which CFO has to undergo to take care of this challenge. But this includes multi-million dollar investment and a multi-year effort. It can't be done in one day. It needs money. So of course, we have to advocate to CFO as well as perhaps to the board also, because this will include a lot of investments. It's basically like selling a business within business. So I think how I would like to do it would be in few steps. So first is perhaps is the create awareness across the decision makers or their DRs or the people who would get impacted, and align it with the organization culture. And then the next step would be to understand the CFO motivation and the organizational priorities. So where the organization actually wants to put in their money. Say, for example, I was talking about Nokia and Alcatel-Lucent. So the year you acquire a very large company, which is equal to your size and operates in 100 countries, perhaps CFO and the board would not like to invest in an IT system and rather go in the product integration and the market integration, or to change go to market strategies. So first you have to, of course, then see when you want to advocate, the prelude to that advocacy has to be understanding the CFO motivation and the organization priorities, and then try to fit in how that digitization will help to improve that priorities, or how it will help the organization and CFO in achieving those targets and its priorities. Then third is, of course, all CFOs understand number best. So then create an Excel sheet or try to find out cost benefit analysis, how much investment would go in, how much effort of the teams will go in, and what will come out. So how we would save money. As somebody was saying, we are in not in the process of saving jobs, but saving people. So also free up the time of the people to do better analysis, again, generate such information which others people or the managers in the organization can use to better the business. And then next step would be already be ready with how you would mitigate the risk. So the first risk would, of course, be that of the investment. The investment you are making, will that result into the savings you are promising or you are proposing. So first is to just give a plan B or create a plan B and show that your investment is safe. Then second is that your data is safe. So, and then we would not lose transparency to, say, for example, inventory, receivables, payables, etc. The area where you are proposing that digitization. So these would be 2-3 steps would I would recommend to anyone if he is proposing a digitization to the CFO.
That's nice, Vishal. A good strategy to propose any automation for a funding. So another question is around the best practices, where I would like Hemant to share his thoughts. So Hemant, what will be your thought process around sharing the best practices around process discovery and applying the process intelligence in an organization, in specifically in finance? And what will be the role of an automation and the digital transformation in the evolution of the landscape?
So, Varun, there'll be two questions. So I'll go in the sequence of the event. So I think the first question is around what are the best practices of process discovery. And before I call out these tips or discovery practices, I need to call out the fact that I have been learning this throughout those 17 years because of driving BPM and RPA. So this will be personally my experience. And in my experience, I personally have seen that 60 to 65% of the effort in any automation delivery is spent for process understanding before we even implement the solution, which is business analysis and requirement gathering. So that makes it very important step. And when RPA began, RPA was there existing for a while, but as a formal strategy, when it became the discovery technique was basically the end user would tell you the challenges. He will narrate his story or her story, which will create the requirement to be replicated. and address the challenges that are in hands. That was very basic, but it evolved and became a formal stage in the automation where now it was including all parties that involved in that process, probing any hidden and unknown challenges. The idea was to identify large size opportunities instead of addressing the tasks in hand. This was the point where we needed more than just RPA, and that's where intelligent automation and discovery then became much more important because the CFOs were spending money on it, right? And now with this pandemic and the industry getting matured, the drivers like customer experience and especially the use of intelligent automation, artificial intelligence became much more important. And what you would see in last couple of years is the automation discovery tools. So you don't no longer have to depend only on the business analyst or the SME's knowledge, but there are solutions that essentially pull out the data from all applications, executing what is a business process at beginning to the end. Using what is called as a discovery algorithm, you're able to analyze what data identifies the pattern in various processes and any exceptions. Now, when in last 2 years, we've focused more in this virtual setup, the ask has to be also moving from the traditional process mining to use process discovery tools. Now, I'll give you a little more understanding of this. So the process mining traditionally relies on log files where your systems can be pulled out data and you map out your process. Now companies are wanting to look at personal productivity applications. Can I look at what are they doing on their Excel, their Outlook? Can I go to their terminals because they're sitting in the virtual setup? Can I see where is the time going and can I bring up some real-time activities? That's where the evolution of discovery itself has been also with time. Now, if you would be a typical setup where you're just looking at RPA, my basic gyan or my basic tips would be that look out for the process that are large in scope, which are volume driven, rule based driven, basic decision making. Avoid the process where you need human to communicate the performance, and focus on the process that can be automated with RPA only, because you're starting. Do not look at the secondary technology early in the stages. But with all the evolution, my basic tips and in the techniques of discovery that will never change. One, educate your SME. If you want to do a success story for your business, you want to educate them on what does automation mean. You cannot start by just calling them out into a call and say they are here to gather your requirement. And here, not only your business, include your technology partners, your InfoSec teams, your access management teams to know what is this all about. Second tip is that always include your domain subject matter experts. Despite of your automation agenda, I know it is difficult for finance teams areas to provide their SME commitments, but it is equally important for them to be available and understand and use their expertise sitting in the automation when they're deciding the solution. And the last is when you are doing discovery piece, have your eyes to details. Skipping even a rare but an important process variation would only lead to have critical problems being identified in UAT or the later stages. So these are those major contributors to me, Varun, which makes a best practice for discovery. I think if I'm good with time, I can take up the next question if you're okay.
Yes, please, Hemant.
So your second question was that what is the role of automation and the levers of digital transformation, right? And Varun, if you look at it and you go to any strategic workshops, you would, and if you go on the internet, there will be at least 7 to 10 levers that they will call out for digital transformation. But to me, because I come from an automation team, there are 3 of my favorite. One is the first one is the non-siloed and connected business process. I think Divya and our previous panelist session also called out the fact that you are not only looking at finance, but that all the business processes connected to it. Why it is important is that these automation drivers need to understand the implication of anything that I'm automating to the downstreams as well. You cannot miss that part. If you're doing that, you're not transforming the entire business, but only that part. The second is consistency in the tangible feedback from your customers' perceptions. You cannot do those typical 3 months or a half yearly quarterly surveys, the surveys that you do specifically for giving a feedback. You've got to be specific on the solutions and ask for feedback while you are implementing even one feature in your application, if you're talking about digital transformation. And third to me is, and that never goes away, is the organizational culture. People to believe in this automation transformation for the long-term gains. And that will only happen where you are educating and including them in that contribution. And that's where digital transformation happens. That is why before you go for customer applications, you have to digitize your internal processes. You cannot be doing something good at the front end and actually having a poor setup internally. And that's where these three are those levers for me that the automation will play a very important role in the entire organization transformation.
Thanks, Hemant, for sharing such insightful levers. So, Vidhan, with that, would you like to share some of the best practices in Novartis around process discoveries and applying the automations?
Sure, Varun. I think firstly, I would like to echo to what Hemant said earlier. And I would say when it comes to Novartis's journey on this process automation and digitization, some of the best practices which we adopted within the organization, maybe I can call out some of the 3 or 4 key things which kind of work for us. I would say to start with, whenever we are kind of making a big bang move or a big bold move within any organization or within any function, it starts with the change in mindset and culture. I think that is the first initial step which within finance we kind of adopted, that how all of us, while we might not be data scientists or experts when it comes to digitization, but how can people become data savvy and digital savvy in their day-to-day lives. So I think culture is one big factor, I would say. In the interest of time, I would like to touch upon a couple of other points, but in a brief fashion. So in addition to culture, I would say the other big kind of lever in terms of a best practice would be the area of impact we want to make when it comes to digitization. For example, in Novartis, within drug development, budgeting is a big bang process, or it's a big process which was done manually in the past. And we kind of transition that more on a digital platform, leveraging descriptive as well as predictive analytics using AI and the other platforms. So I think we need to decide what is the impact we want to, in the end, create for the business by doing that digitization. The third, I would say, as a best practice, very important, is simplicity of the digital model and it being modular in nature. Because as you know, while we celebrate some of these experiments or these transitions, we also need to ensure business continuity, that business doesn't hamper or it continues seamlessly. And we as finance professionals, we need to drive the business, be an enabler there rather than being a roadblock. So how do we kind of plan in terms of making our digital platforms more modular, so that you can plug and play certain things which do not work and certain things which work can be integrated then with the business platform. So I think simplicity and modularity is very critical. So I think lastly, I would say, how do you make these platforms self-serving also, Varun? So when we plan to make kind of platforms digital in finance, are they self-serving to the businesses? Because if they become self-serving, then we are also saving a lot of time both for the finance professionals as well as for the business. And then finance can actually become a co-creator in creating the future value for the business rather than just reporting numbers. So I think these were some of the kind of learnings or best practices we adopted here in Novartis. Back to you, Varun, for any other insights.
That's great insight from all the panelists. With that, we would like to close the panel with the closing remark, right? So I would invite Vidhan just to share a couple of key takeaways for our audience. We have around 150 audience in this call, and this presentation will be posted online. So maybe many people will understand this, right? So just 2 to 3 takeaways to make the foolproof strategy to deploy RPA in our organization.
Absolutely, Varun. So I think firstly, one key takeaway from our discussion is that as finance professionals, it is a question for us that how do we want to view machines? Our machines are competitors or machines are enablers? So that is one big question we all need to answer, reflect on. And what I believe is definitely machines or digitization is a key enabler, which will enable the future CFOs to not just do a post-mortem analysis or just report the past, but actually become an integral part of the business in co-creating the future growth and asking the right questions to the business. Because once you automate and you remove some of the mundane tasks on a digitized platform, that is where as a finance professional, you can actually act as a strategic advisor to the business rather than more of the bookkeeping part. So that's a big key takeaway from this entire session today for me, that finance needs to move from reporting to being a strategic advisor and a partner to business growth.
And Vishal, as per you, some takeaways for the audience.
So I would echo what Vidhan was saying. So primarily, I would like to say same things.
That's great. And Sudhanshu, would you like to comment additional?
Yeah, Varun. So, say in terms of two, three key takeaways based on our today's discussion and based on our understanding on the RPA journey, how the organizations should decide their RPA journey. So, I believe first of all, as in any sort of say digitization, ERP implementation for RPA journey, also we should have a effective RPA implementation plan, right? When we say effective implementation plan, it includes selecting the right solution and ensuring the scalability in terms of the future needs. And we should have a proper performance control within the organization, because we talked about, some of the panelists talked about in terms of self-service. When we say self-service, everybody is doing some sort of shadow development, then there should be some performance controls also. So that is also one of the key takeaways as per my understanding. Thirdly, I would say, as Hemant, I believe, also touched upon that point, in terms of involving the right set of users, involving the users from the front, involving business users uh, from the scratch only, so that they feel that this is their process and they need to take this forward. It should not be that this is being initiated in one of the department. This should be like top down approach. If you would go through multiple multiple documents which has come up on RPA parts, so this highlights that if this would be a top down approach, then only it would become a success. It should not be just one of the journey which is being undertaken in one of the department within the organization. It needs to be scaled at the enterprise level. So thanks, Varun. Thanks. This is all which I would like to say.
That's great. From my experience, I'm from PepsiCo, Hyderabad. We have around 2,000 people. We have an innovation center in Hyderabad. So, what is we are trying to develop in finances, basically an open culture where people can unlearn their old ways of working and understand the disruptive technologies and how we can best prepare the use cases for the global entities performed from Hyderabad, right? So that is the key learnings we are deploying in our team member, and the culture is very open. We are open to collaborate. We are open to understand, and we collaborate very extensively to deploy the technologies. With that, I would like Hemant some additional views on the takeaways.
Yeah, Varun, I was wanting to talk because see, you guys are coming from the expertise of finance, and I come from the team that could support you. And having worked with three different CFOs in totally different type of industries, my common message or my learning is that if I would be working with you or with anyone else, the first one is that the CFO and his team needs to have a steer and believe in automation. If your CFO is not participating and he's obviously talking about it to the team or wanting automation as an agenda, but not talking about that to his team would not make a difference. And I've seen that in my previous organization. One of the CFOs I'm really proud to be connected to was the major reason of that success. The second is the automation agenda is no more about efficiency. That was for operations. finance, it is more of taking away that mundane tasks, giving extra weightage to the risk and administrative kind of activities to go away and bringing more value from it. And third being that the domain SMEs, because you guys, these guys are specialists in niche capabilities of finance, they've got to be open and wanting to have automation rather than it becoming a need for them. So that's with that, I think that's where I see the difference, making the difference in this particular area. So yeah, that's my view, Varun. Yeah.
With that, I would like to hand over the session to the host and would like to thank all the panelists for giving your valuable insights. Thank you.
Thank you for
Thanks, Varun.
moderating, and thank you all panel members. Now, before I invite next speaker, there is a form which we have posted, our partner Quality Kiosk has posted. The feedback is important so that we keep on improving and serve you people better. So I will request all of you to please fill out that form. It will not take more than 20 seconds of you people. The feedback is in the chat window and it will be from Quality Kiosk. Rajat. So I will request all the delegates, please fill out that feedback form in the next 20 seconds or half a minute. Then I'm going to invite the next speaker. I will request every one of you. It's a request so that we can serve you people better. All the delegates, please. It will not take more than 30 seconds of yours, every one of you, please. One final request, I will request all the delegates to please fill out the feedback form. Okay, hope everyone has filled that. Let's move to our next presentation by Sanat Satyan, Director Head Enterprise Sales with Credit Watch. To give you a background, Sanat leads the enterprise sales at Credit Watch and is responsible for business development and product delivery strategies for new market segment. He plays a key role in product development, bringing in perspective to customer insights and user experience. Prior to Credit Watch, Sanat managed the enterprise data solution business with South Asia at Bloomberg for 5 years. He has also extensive industry experience in retail and private banking as well as commodity and equity research at ING Bank, Lehman Brothers, Nomura. On that note, all to you, Sanat, for your presentation.
Thank you for the introduction, Sandeep, and good afternoon, everyone. It's been heartening to hear all the CFOs today, and maybe I should just call them tech CFOs because it's great to hear, the adoption of technology at the corporates in India. Just a little bit about Credit Watch. We are a 5-year-old startup based out of Bangalore. We are a data insights as a service platform which leverages artificial intelligence and machine learning tools to provide actionable insights to businesses in India. And it was very good to hear some of those same thoughts from the panelists and speakers today. Be it the hands on the wheel approach from Anand at Amazon, or the first refine and then automate approach from GMR. And of course, from Divya at IKEA, the ability to use and integrate external and internal data. I think those are the elements which really sort of echoes with the team at Credit Watch itself. And finally, from Vishal at Nokia, having action-oriented insights to shape the future of your business teams. I think that's where Credit Watch really plays in. I have a short presentation for the next 15 minutes, and I'll sort of help focus on a couple of elements that we heard today. And in order to give you an insight on what Credit Watch really does, and also how some of our tools can help drive the businesses that at your end. To take the to summarize, there was a lot of conversation today, and we saw conversation around surveillance, around RPA right now, around hyper automation, data, supply chain, and these are keywords that I just put, in the last, 2 to 3 hours that we've been sitting here, right? And it's good to see that, businesses today are talking about adopting machine learning, about having a communication channel with their customers, which is very efficient and which allows them to be digitally transformed, right? And that really sort of brings us to the fact that there are supply chains today which were dented during the last 18 months during COVID, but now have improved, right? These are some comments from CFOs like yourselves in the last 6 to 8 months, right? We've seen MSMEs, the smaller corporates today who have been motivated to formalize their businesses. There is a lot of talk about GST. There is now obviously representation with the GST Council to improve that further, right? And the aim, of course, is for businesses to become credit worthy, which will essentially drive the growth of the economy as well. The chairperson today from Clear, of course, has spoken widely about the ability for enterprises to save almost 7 to 8% of their profits, which typically get lost due to ITC claims, right? And there have been traditional ways of managing that by actually blocking vendor payments, and those are not efficient ways to manage finance functions, right? So we believe that there is an ability for technology companies to step in to build deep business level expertise and to also help you grow your businesses, right? We receive, one of the CFOs and the business heads have said that, while they have gone into adopting digital platforms, the ability to actually convert some of those inquiries into revenue opportunities has been limited, right? And the real question is, we need to ask that question to ourselves, right? Why is that inquiry not getting converted, right? And we'll sort of work towards an approach to improve that today. The amount of data that also sits today, really needs to help businesses find new customers to grow their businesses. And also, is there an opportunity today for us to use those machine learning tools to improve operational efficiencies and forecasting and business intelligence? At the heart of CreditWatch, of course, we have AI and ML tools which we have deployed at scale. We work with 40 plus customers today, both in the BFSI and the corporate space, where they use our tools to generate insights from the data that sits either in their domain or from the public domain itself. CFOs like yourselves, of course, are catalysts for digital strategy today, right? You interact with your treasury teams, you have suppliers on one end and your customers and clients on the other end, and you have your metrics and KPIs to manage a good balance between all of these stakeholders. And what we really see, CreditWatch stepping in this domain is helping you sort of manage that surveillance better, right? Helping you understand your business partners better, and also automate some of those processes in the scheme of things, right? So, today I'll focus on, around, 4 objectives, that essentially sit at the heart of, your functions today, right? Of course, as any business owner, you would ideally want to grow your business. And we'll speak about how you can grow the network that you have, not just on the customer side, but also on the supplier and the vendor side. We work with some large corporates, insurance companies, who actually use us to identify new partners who can serve as good business owners and business partners in the long run. The second aim, of course, is to also onboard these partners very quickly. We know, procurement teams, sourcing teams spend almost 1 to 2 weeks to evaluate businesses today. These can be your vendors, your suppliers, of course, when the customer comes in, the aim, of course, is to onboard that customer quite seamlessly. So how do we bring in that digital, journey, which can allow all of these partners to get onboarded quickly as your business partners, right? The third, of course, is, from a finance function specifically, the aim to, of course, improve your working capital, right? And we've seen, in the last 1.5 years, especially post-COVID, the focus towards rejuvenating the entire supply chain ecosystem within India, right? We see supply chain financing firms speaking to anchors and large corporates yourself so that they can support the MSMEs, who are your suppliers as well. So we'll speak a little bit about that ecosystem as well and how CrediWatch actually works with some of these trades platforms, these invoice discounting platforms. In fact, now we are moving towards the whole pre-shipment financing, PO financing domain, right? So moving much earlier in the value chain itself, right? So we'll speak a little bit of that and understand finally how we can help sort of improve that entire ecosystem. And finally, the aim of any business intelligence tool or an MIS, of course, is, while you would want to report internally and externally to your auditors, the aim also is to get early indicators, for your business. And we look at an ML-driven early indicator system today, which really sort of brings together the external and the internal data that businesses own today to generate the insights. Starting from the first objective, right? How do you sort of really get new customers, suppliers, vendors who are trustworthy, right? The traditional way of growing your businesses have been to strengthen your either existing channels or to add new channels like digital platforms to access new marketplaces, be it the GEM platform or any marketplace which is specific to a specific industry, either infrastructure or materials or steel. We've seen so many new marketplaces coming up where you have suppliers and buyers coming to interact, right? And these are channels which we've seen really sort of picking up because of the digital ecosystem that has been getting created, right? Of course, the whole M&A space is wide open today. We see acquisitions happening to either have an organic or an inorganic growth of either technological capabilities or to just acquire new business, business growth strategies, right? But if you move further away from these traditional approaches, what we are seeing really is corporates now looking at leveraging public data to identify new leads and new customers. And this is not just now restricted to customers. We are also now getting questions on whether you can help us identify suppliers who are trustworthy in a different part of India, right? A North India based copper wire trader would ideally want new set of suppliers, maybe somewhere in southern India, because if he wants to expand, right? So, an example like, can I find all auto component manufacturers in Pune with a turnover greater than 50 crores? You have your own filters that you would ideally want to identify either customers or suppliers or vendors, right? But a very good change that has happened in this approach also is, can I now leverage some technologies like geolocation or smart filters or location-based filters to identify targeted suppliers, right? I want to look at a targeted customer base to grow my business in a new location, right? So if I have a certain pocket of customers in the city of Bangalore, can I find similar customers in Hyderabad if I want to expand in that region, right? And these are very smart data science-based approach where you look at the public data sets, you look at all the data ecosystem that sits in the domain today to such an analysis, right? So CrediWatch today sits on almost for growth. The real value that comes in from deploying machine learning tools is to look at next 2000 leads, which replicates the features of my top 500, and that's where the real value add is, because when we've done such exercises for, large NBFCs, some large auto companies in India, we've actually seen a very high conversion rate of almost 25 to 30%, which is pretty high considering the standards of leads that come today in India. So, to summarize, there is an opportunity today to, as business owners, for you to find the right business partners through machine learning tools, as well as adopting certain technological tools in this area. When it comes to partner onboarding, we've seen traditional ways as when you want to onboard a supplier today, right? You take feedback from the market, you rely on a GST based invoice, you verify that GST, you depend on your supply chain network, right? If you are an FMCG player today in India, typically FMCG players, rely a lot on their network to actually ascertain the strength of their supply chain itself, right? So to identify whether a particular supplier will be able to supply in relative amount of time or not, right? So, while that has really worked well, we've known in the last 2 years that, a broken supply chain really sort of disrupts this entire onboarding flow, right? When it comes to vendors, of course, credibility, references of customers, the experience in delivery, all of these play a very important role. And finally, for onboarding your customers, the traditional way of, manually, onboarding them hasn't sort of worked, right? Just by getting their GST number today, you can sort of get a lot of information related to, about your customer. And, that sort of also helps you complete the whole KYC process, right? So, today with CrediWatch as well, we've sort of deployed successfully the ability to onboard businesses, right? We've seen today the ability to onboard individuals has been widely adopted, right? When I say individuals, I really mean, you can really apply for a credit card today and you can get it or an insurance product, and you can get the entire, product, in your email inbox within 30 minutes, because the entire process is automated digitally, because you just have to supply your PAN number, your Aadhaar card, and all of those are seamlessly verified, right? But onboarding a business is quite a big deal, because now you're looking at a business. There are multiple filings that they do. There are directors, there are independent directors. How do you ascertain the background of certain stakeholders at their end? And the aim then, of course, is to find out whether you would want to do business with such an entity or not, right? So a digital onboarding solution really looks at looks at a 360-degree view on such businesses. It looks at providing a digital interface for ID verification, and also as I said, right, the ability to get a go no go decision by getting the right integrated risk assessment tool inbuilt into that entire process, right? We work with some of to give you an example, we work with some of the insurance companies where they have close to 500 to 600 TPAs, right? The third party partners who they use to distribute and to process claims, right? Today.
Sorry to interrupt. We have overshooted a time quite a bit, dear.
Sure, I'll just cover a couple of minutes here more, and then we can move on to the questions. So completing that example, close to 500, 600 such entities today at an insurance company get seamlessly activated through a digital process, right? In the working capital space, of course, the invoice credit period is something that we work with. We help a lot of SMEs and corporates today to via the data insight reports that we provide. So we have scorecards. We have a score which allows you to ascertain whether a small business, which is even a proprietorship or partnership, whether it is worth doing business with. With the help of consent, you can get the last 24 months of GST invoices, the bank statements, the income tax filings of businesses today, and ascertain whether these businesses are genuine and whether there is money flowing in the right channels as well. And with respect to supply chain financing as well, the whole supplier onboarding flow, generating insights in the supply chain ecosystem, as well as monitoring these suppliers remotely, and as well as there's those transactions, we have the ability to sort of provide those. And finally, the ability to actually integrate public and private data to generate early stress indicators, right? So today, CrediWatch monitors close to 25 to 26,000 businesses on a daily basis for all our customers. And what we really do in that is we ascertain the genuineness of those businesses, right? They have eligibility for based on your own internal policies, as well as we generate insights to ascertain whether these businesses should be in a high risk, medium risk, or a low risk business, right? And all of this is automated via a machine learning models, and helps you monitor the stress in your portfolios as well. What's important to note here is that a lot of our CFOs today who spoke, they spoke about deploying ERP tools like SAP, integrating with Tally, QuickBooks, or GST suites. I think those are fantastic approaches. What we really see the ability now is that once you have those tools in place, how do you sort of generate actionable alerts and insights from those tools as well, right? So is there a possibility for me to look at all the data related to my suppliers from my internal systems, as well as how that supplier is behaving externally, right? In whether there are any deviations in filings, or whether their financials are becoming distressed because of COVID, right? All of those information, and can I then integrate that into providing an automated risk classification system instead? So that's the fourth pillar, which I sort of wanted to conclude with, where you have the ability to now bring insights from multiple data sources and drive your business growth faster, right? Happy to take any questions, and our details are also shared on the slide here. If anybody wants to reach out, please feel free. Thank you so much.
Thank you, Sanat, for your time. I will request the delegates to put up the question in the chat window. In interest of time, I'll request everyone to please put it in chat window. And Sanat, please answer them on individual basis on chat window, dear.
Sure. Thank you so much. And, hope to connect with all of you if your interests are in CreditWatch as well. Thank you.
Okay. Okay, let's move to our next presentation by Mayank Holani, who is the CFO with Schneider Electric Infrastructure Limited. He is associated with Schneider Electric Group since 2011 August. He is a CA with post qualification experience in 19 years working with consulting as well as Indian, Scottish, and French MNCs handling finance, planning, and many more. Prior to Schneider, he has worked with companies like JK Tire Industries Limited, Chambal Fertilizers Chemicals Limited, Kane India, before moving to present role in Schneider. He is a fellow member of the Indian Institute of Chartered Accountants of India and also holds specialized qualification on Information System Audit and ICAI and IFRS and ACCA. All to you, Mayank sir, to start off with your presentation.
Hi, good afternoon, everyone. Can you hear and see me?
Yes, we can hear and see you, and we can see your slides as well.
Sure, thank you. So I'll quickly move on. As I understand, we are already running late. So before talking on evolving role of CFO, I would like to go a bit into how the CFO role has been and what it has been. So traditionally, finance professionals have been considered to be very conservative and risk averse. And general image has been you spend most of time crunching the numbers and performing maybe mundane but very important tasks like financial reporting, budgeting, cost control, cash flow management, risk management, etc., etc. And that has been the traditional way or the traditional role of CFO. Now, CFOs are and will continue performing these tasks, right? These are the basics and the foundational tasks. But now in today's scenario and even in the going forward worldview, the role, it's not enough for CFO to be merely being the financial steward of the organization. And that's where the need for CFO has moved away from traditional finance job, though these will always remain fundamental and to some extent valued as well. So where does this role evolve and where is it going? This role has already been going through a transformation, and currently also as we speak, it's going through a major transformation. And if you see, COVID pandemic has placed CFO role at the heart of business with an increasingly and more focus on strategy execution. Today's CFO is not just a financial leader or a functional head for a finance function, but rather it's a strategic leader who is central to any critical decision making and any planning for the organization. It requires a, if you look at generally finance professionals, it requires a completely new skill set for many finance professionals, right? If you have been working in a traditional way, though some sort of evolution has already been underway over last many years. There has been a significant change in perception and expectations of CFOs. No, and which but these are being highlighted more and more now than it was earlier. The role of the guardian of an entity's finances has been superseded by the one where CFO has a much larger and broader function and responsibility. And once we have the right technology and teams in place, the next important priority for today's CFO is to collaborate with other functions, be it HR, IT, procurement, administration, marketing, anything and every function. And above all, the CFOs need to work very closely with chief information officers or CIOs to ensure that they both are speaking the same language to encourage digital innovation. CFOs can have more time freed up, right? And considering this digitization and automation, CFOs can have much more time freed up to push on insight generation and business partnering, instead of spending their time and mind on the simple number crunching or looking at the insights. So now, CFOs can't work alone. They are team leaders and they have to work along with teams. So they need to lead the teams also to partner cross-functionally to identify and capitalize on new growth opportunities. And that's the key. Now I'll move on to analytics. We must be ready to adapt to technological changes and embrace new digital skills and tools like advanced analytics. We have to be able to use big data to our advantage, which can provide deeper insights into our business. We have to have the ability to analyze and understand vast quantities of data, which is critical to optimize our organization's strategy. Core finance processes needs to be streamlined through automation and SaaS technologies. And influencing and shaping business strategies through data-driven and technology-empowered decision-making is key to success for any CFO. Now, moving on to digital tools, automation of finance function is typically the first step towards digitization and the evolution of the new finance function. And these digital tools and automations can bring huge benefits in some of the basic and core processes of finance. And to name a few, you can see like order to cash, procure to pay, record to report, or hire to retire are some of the processes where automation and digitization is easily available and can give huge benefits. Now, finance teams can free up a lot of time and energy if we have these automation, and the time those so saved can on one side give efficiency to the and cost saving to the organizations, but also it can we can redeploy those resources for driving strategy and changes across the organization. And this automation then needs to be paired with the use of data visualization tools, which gives access to valuable real-time data. Data visualization softwares can generate clear, timely, and actionable visuals, which can be very productive and which can be very beneficial to the businesses. And this can provide advanced analysis to make informed tactical decisions and identify growth opportunities for business. And the work key is, as we all know in summary, companies that can leverage data strategically will be tomorrow's market leader. So that is for sure. If we don't change ourselves along with time, then we'll be left behind. And it will be the more delayed we are, it will be difficult to catch up. Now move to the CFO role as a business partner. CFO, as I spoke earlier, is not just a finance head or finance function leader. He also acts as a business partner to the CEO and the department other functions. We work closely with the business units, creating a real and active partnership with management and operations. And the business today needs real-time support and analysis instead of historical number crunching or the post-mortem kind of thing. We are considered as a trusted advisor, and business values our contribution if we add value in decision-making process and not just give a the historical view of the situation. And to be successful in the role of a business partner, the key skill is the ability to communicate with people, and you have different stakeholders which may have a different level of knowledge, may have different technical backgrounds, and they may not understand your technical language if I would say so. So we have to be able to communicate based on the audience. We have to understand their requirements and then deliver information in a clear and concise manner. So all this put together requires a mix of analytical, commercial, and communication skill set, which is at the heart of successful business partnering. Now, and maybe if we keep taking questions on the way, or I missed asking, or
Sorry,
we
sir?
put it for the end. I think we take questions slide by slide, or we wait
No,
for
at
the
the
end.
end, sir. At the end, sir.
Sure. Thank you. Now, what are some of the traits of an effective finance partner? Look at it. First and foremost is shaping the strategy. Right? That is the starting point for any organization or any business. Then translator between finance and operations. Right? You have different people, different technical knowledge, different expertise. So we have to translate between finance and operations. Governance and compliance remains a key area, and it's non-negotiable for any organization. Then we have to manage our tactical business performance as well on a day-to-day basis, month-to-month, year-to-year basis. Goes without saying. Influencing skills and stakeholder management are very, very important in today's and much more in today's scenario. And last but not the least, dealing with ambiguity. The word is getting more and more complex. Things are more and more ambiguous, and we have to deal with it on a day-to-day basis and come out with a solution or a win-win formula. It's not just simply as a finance head or as a CFO, we can just say, okay, this is not possible or this will not happen. So we have to come out with a win-win formula where we do not compromise on compliance, governance, and our organization's strategy, but also deliver performance. Now I'll move to the management of board, stakeholders, and investors. If we look at again, traditionally CFOs have been presenting performance as a historical view to the board, investors, and stakeholders, which may or may not or really does not add much insight for future. It has been a kind of just a past numbers reporting. Now, inward looking view does not necessarily help the stakeholders point of view or their their strategy to understand what is good or bad for an organization or a company. We need to put together an objective view on performance and also present how it compares with our own strategic direction and also with the market and our peer group companies. The board and investors are looking for expected future performance and qualitative observations, not just the numbers or the quantitative data. Proper communication with board and investors can help them appreciate companies' objectives and also the scenario in which you operate. Now, contextual insights can help the board understand the areas they should watch to reveal potential advantages or weak spots, as the case may be. Now, proactively engaging with board can help CFOs a lot. If we engage with the board members or especially the independent directors proactively, this helps receive their valuable support and advice in a timely manner, and they are also, the board is also not surprised when you go and present to them certain things. This, we should be especially mindful about the relationship with the audit committee chair, which is an important position and the role from the perspective of CFO. And we can definitely define value creation in context and proactively anticipate board's needs with Excel. So this is, for us to excel or to, perform well in our roles, we need to define value creation in the right context, and this will help us achieve success. So the role of CFO in the case of investor relations could be a bit different with the dealing with your shareholders or the key larger investors. What is it? If you see, first of all, we have to understand our shareholder base, and the more different kind of shareholders may have different kind of views and different kind of expectations, whether it's a HNI shareholder or a mutual fund or a insurance, they can have different aspects or perspectives. As CFOs, we need to review our disclosure policy and make sure it's rightly calibrated. We have to have an appropriate IR, investor relations plan in place. We have to develop it if it's not there and keep reviewing it on a regular basis so that we do the proper, we do deal with investor relations in a proper way. Now, do we need to develop investor positioning as well? And the investor relations website where you keep all the investor relations information also should be reviewed on a regular basis, and so that we don't have things like which are completely outdated, and the latest information or update is available to stakeholders on a real-time manner, so that they also appreciate how things are going. And then, and last but not the least, we have to ensure investor relations functions execution. So our plans should not remain on paper alone, they should be visible on ground also. Now I move to stakeholder alignment. We have to ensure, see, as a primary role of a CFO, we have to ensure delivery of profitable growth and value, and mitigate risk and build trust among our various stakeholders. We lead the integration across the entity and supporting alignment of resources with strategic choices. So we have to ensure that all sides see how resources align with long-term and short-term strategies as we make resource allocations, right? And we have to evaluate various decisions and challenge the business cases so that our resources allocation is in the right way and in line with the company's strategy. We need to ensure that organization fully understands the performance and outcomes of such choices. And we have to embrace the spirit of sustainable thinking and actions and make sure this happens across the organization. And last but not the least, collaboration with various functions like HR, IT, procurement, marketing, everything. It's very important to drive any sort of transformation which is expected from the CFOs. Now, in the last, I'll go to the 4 pillars of the role of CFO, which are key to any CFO role, and would conclude. First is the leadership. Our leadership is how we define our role and how we define the shape of the organization. Because whether it's as a business partner, as a communicator, as a cross-functional participant, or as an influencer, leadership plays a major role in the CFO function. Then comes operations, be it data analytics, profit improvement, or even any other routine accounting task. Operations is the next area where we need to, is a key pillar. And the third one is controls. And I would say even governance in this. So identifying, quantifying, and mitigating risks is key for our role as a CFO. And then the strategy. We have to support, evaluate, and communicate a strategy in a proper way so that it's appreciated and understood at the all levels across the organization, and then we can deploy it further. I think I'll conclude with that. Thank you. Any questions we can take now?
Thank you, sir, for your time and presentation, sir. We have really overshooted time. I know, sir, questions are important. I will request delegates to put up the question in the chat window, sir. So I will request Mayank, sir, you also please, if you could answer the questions in the chat window on an individual basis, that will be of great help, sir.
No issue. Thank you.
Thank you, sir. Thank you, sir. Okay, let me invite now Amit Aggarwal, Group CFO for Raymond. He has hands-on experience on general management, finance, treasury, corporate finance, sales and marketing, revenue management, supply chain management, logistics, purchasing, IT business leadership, with proven success in achieving operational excellence, specializing in business turnaround, restructuring M&A, and maximizing shareholders' value. Superior communication skill, interaction with relevant stakeholders, initiate and implement different ways of doing business. On that note, all to you, Amit sir, for your presentation. Okay, I guess Amit has some emergency, so I guess Amit is not there. Delegate, sorry for that inconvenience for one speaker, for Mr. Amit. We have to excuse him for the emergency. Now we would like to invite or do the panel discussion, which is the last part. And for that, first, I would like to invite Preeti Khurana, who is the Director, Advocacy and Regulation with Clear. To join Preeti, we have Anand Agarwal, CFO with V-Mart Retail Limited, Ganpati, Chief Business and Strategy with Credit Watch, Vidhya Srinivasan, who is the CFO with Bata India, and Rakesh Tiwari, CFO Adani Electricity. Give us a few seconds here. We are, the panel members are joining. Okay, I guess we have now Preeti and Vidya joining in. So our panel moderator is Preeti. Preeti, welcome back. I guess we missed you for a few seconds. To join Preeti, we also have Vidhya Srinivasan. I will request panel members to please switch on their videos.
Hello, hi.
And, we also have Rakesh Tiwari, sir, who is the CFO with Adani Electricity, also joining the panel member. And meanwhile, Anand and Ganpati join, we can start off with the panel discussion, Preeti, with Vidya and Rakesh, sir.
Sure.
Rakesh, sir, you can hear us? Rakesh, sir?
I'm okay, let's start.
Yes,
right.
yes. So,
yeah, hi everyone.
Ganpati has also joined in this.
All right.
Achha, yes, he dropped out again. Okay, Preeti, we'll continue. As soon as they join, I'll update you, dear.
Sure. Good afternoon, everyone. Thank you so much for joining in this session. My name is Preeti Khurana. I'm a chartered accountant. I work for Clear. Today, we are hosting a panel discussion. It's a webinar around the fifth. It's the fifth edition of Future of Finance, hosted by UBS. Today, we are going to talk about how CFOs must progress to being an enterprise-wide strategists, how they are the change leaders, and what kind of a self-aware decision makers they are, and also how important technology has become in today's world as companies and enterprises prepare for a digital transformation, which has actually got a significant push thanks to COVID and also the coming of GST. With the coming of GST, we've noticed that GST compliance has undergone massive change, and there is a lot of evolution, and a CFO usually finds himself or herself occupied with changes that are vast, and these changes have a far-reaching impact on their business. Now, with this kind of a backdrop, today's discussion will be centered around how CFOs' roles have evolved, over the past few years, and how they can prepare themselves to stay ahead of the curve. So, joining me today is Anand Aggarwal. He is CFO at V-Mart Retail Limited. Thank you so much for joining in, Anand, and we're bit delayed, but I'm glad you could make time. I also have with me Vidhya Srinivasan. She's the CFO at Bata India Limited. Thank you so much, ma'am. Great to have you today. Yeah, and again, apologies for the delay. I think the events have been running a bit late. Joining me also is Rakesh Tiwari. He's the CFO at Adani Electricity. Sir, if you could please switch on your camera, it becomes easier in this online world to interact and talk to each other. So will be wonderful if you can switch on your camera. Also, I have with me Mr. Ganapati. He's Chief of Business and Strategy at CrediWatch. Warm welcome to all of you. Ganapati sir, please request you to switch on your camera. I think he's dropped off again. So it's just the four of us and a whole lot of things to talk about. All right. Right. So, yeah, just take a moment to settle in. And yeah, thank you so much for turning on your cameras. I'm going to begin with Anand. Anand, with GST coming in the past few years, it's been nearly 4 years now, and the COVID pandemic, there is a lot of focus on curtailing costs. Like costs have really become the center stage of all discussions, all finance related discussions. And COVID, like I said, has been the biggest driver of this kind of transformation. So it would be wonderful if you can share your insights or one or two key areas of digital transformation that you might have undertaken in these times to be able to drive cost optimization, and any solutions that you may have implemented to sort of drive your business outcomes to sort of bring back the focus on costs of the business. Anand, you're on mute.
Yeah, thank you so much, Preeti, and good afternoon, everybody. It's wonderful to be here, and I can see a lot of familiar faces around. So thank you so much for joining me. I think the last 1.5, 2 years have taught us a very important lesson, and I just want to highlight before I get on to the cost part. But there are 2, 3 things that we have really learned in the last 1.5, 2 years, and one is that data is the new oil and cash is king. And additionally, I think cost management has become every executive's hobby and personal statement. But at the same time, I think I also feel that one of the very big important fallouts of this entire last 2 years also has been the digital reset. And that's impacted every part of our lives, whether it's corporate or personal. And that has significantly led to the change in the thought process of how cost management can also evolve. I think the rise of the machines in the 1990s has now been replaced with the rise of the algorithm. And artificial intelligence and ML are increasingly playing a very key role in decision making. The other big aspect, I think, which is related to cost is also that the current year, and I think also the next 1 year, is going to be the year of inflation. Commodity prices work in cycles, and global inflation has been rising, which has been fueled by easy liquidity and also supply chain bottlenecks. Back in India, GST rates have also been proposed to be increased from 5% to 12% on apparel, which will again drive up more prices up from January onwards. Equity markets are on fire, sensing the high liquidity absorption opportunity. And additionally, I must also mention that there is more than $40 billion which has been funneled into the startup ecosystem in the last 6 months alone. And all of this money has to find some avenue of consumption in some form, whether it's marketing spends or salaries or service-led consumption. The bottom line is that all of this is also further going to drive up inflation for all of us in some which form. Now, the big challenge is how to solve for this huge inflationary pressure. There are multiple opportunities, and we've also learned the hard way. Personally, also in our company, being in retail, which has also been very significantly influenced or impacted by this COVID challenge. I think cost pressures have been extremely high, and digital transformation has been the key for both accelerating growth and also in leveraging scale to bring down cost. So in my view and in my experience, I think digital transformation is one of the big ways of managing this change. Whether it has been by way of using more data analytics or using more data-driven decision making for reducing flab across the operational cycles of operational areas, and with the end objective of making operations far more efficient than before. There have also been organic fallouts of the digital journey. Some things which have been forced upon by nature on us, reduced travel, more virtual meetings. We are also meeting now in a virtual forum. A lot of marketing has shifted to digital, and that has also led to some amount of, I would not say savings, but let's say leveraging of cost or improving of cost structures. On the retail side, I think we've also shifted towards more digital tools, whether it be in the form of, let's say, using automated tools for store audits or doing, RPA-led changes in the system. But even for, let's say, on the operation side, we have shifted to using a lot of digital tools for doing something which we were earlier relying on doing physically and incurring more higher cost. Sure. The future strategy, I think, as far as the finance domain is concerned, I think we remain extremely focused on imbibing more of RPA, more of robotics, and more of analysis in how we can, steamroll this change. And while we have been reducing cost on all discretionary spends, we are significantly investing in new capacity buildup, which is mainly digital for all future growth simultaneously. Yeah, I think that is all that I wanted to say. Yeah.
Great. Thanks a lot, Anand. That's like quite a macro view of, what is going on, post-pandemic. And, especially you spoke about how digital transformation has sort of impacted every area of a business where, it could be marketing or inventory management and what have you. So, yeah, thank you so much for that perspective. And coming to you, Vidya, on a similar topic, we spoke about how cost optimization has become critical. Connected to the same question is, the agenda around protecting profits and managing growth. Now, if you could please share your thoughts around how growth has been, what have your experiences been in the past with this matter? How have you been running your costs, and what kind of digital transformation have you observed in your business, and the kind of technology has played in that transformation?
Right. So I think in retail, obviously the cost journey has been something that all of us have been living in with the last 2 years for sure, as the top line has dramatically come down, especially in 2020. And therefore we have taken various activities like all of us are familiar with, whether it be, the deferring discretionary spends, or, whether it be on rent renegotiations, or whether it be on looking at every element of, cutting down on traveling and, office spaces. So we basically, I think between all of us, both in the panel as well as in the audience, I'm sure we've kind of touched upon every cost lever, and maybe 100% of all levers are being employed in all companies. So I think that particular journey, I feel, is not that interesting in some ways because all of us are living with it on a daily basis. I think the piece which is very interesting right now is where we are getting to now as a country, because I think in the second half, and inshallah, if COVID doesn't continue or anything come back, I think now we are really to get our arms around growth. So I think and growth and cash. So as a CFO, I think there are 2-3 things which have to happen. One is, of course, you have to work with the management team in defining what is the growth agenda for the company. In certain cases, it's about, going back into the market, spending again in marketing. In other areas, it's about regaining market share because we've lost to e-commerce or whatever it is, or somewhere it is growing market share in online or in brick and mortar or in cities. So there is a growth agenda to actually be shaped as a company. Post that, it's really to say that, okay, now there are things that we've not spent on over the last couple of years where you actually have to spend. So prioritizing where we have to spend because funds continue to be limited. And also, you are at a stage where you really don't want to go gung ho because you don't know what the future holds. You've been burned a couple of times. In 2021, first quarter was good, and then the second quarter happened. So I think we want to be cautiously optimistic is I think where we are going with this. So really prioritizing all the areas in which you have to spend and trying to give yourself and keep yourself as a CFO as much flexibility as possible, so that if we have to kind of close the tab somewhere, we still have the option of doing that, right? So I think that, according to me, is the second piece. And I think the third piece, which is also kind of interesting, is to look at some of the learnings that we've had in the last 2 years and making sure that we as an organization or we as a industry don't forget it. Okay, and I think technology comes within the space of that. I think in the last couple of years, we made huge strides, more than I think many people have done in 4-5 years, to embrace what technology can bring to the workforce. And I think the important piece is to kind of remember not to slip back into old bad ways. If the virtualization can work, if we can work from home for twice or thrice a week, and if that leads to not just cost optimization but also work life balance, or flexibility for people. I think it is very important to kind of make sure that this is not something that is forgotten and we kind of embrace it going forward. Yeah.
Right, right. Yeah, those are like you've hit the nail on the head, with when you spoke about how we need to be agile, especially with respect to the way we run our business and also the way we work. So in both these aspects, I think it was excellent when you spoke about costs. When we talk about costs, like whatever you've not been able to spend on, or which are the costs, identifying places where you could sort of optimize further. I think those are some excellent ideas, which I'm sure the panel and the audience would benefit from. Coming to Rakesh, sir, welcome to the panel. And yes, your camera's turned off. Request you to please switch on your camera and unmute yourself, please. Yeah, so whenever we talk about growth, we talk about costs, we talk about optimization, we have to rely on data. Like without data, and somebody said in the panel that data is oil, is today's oil. So without enough data visibility, what after all is the finance function. So do you feel there are any specific areas where there is non-visibility of data and it can hurt a CFO's functioning? So I'm going to talk especially in the context of, say, GST compliance. Now, when it comes to GST compliance, while we may have enough visibility into our own compliance in terms of whether we are filing returns regularly, whether we are paying our taxes on time, but when it comes to our suppliers, our visibility may be especially limited, and our ability to influence compliance from their end could also be impacted. So with that sort of backdrop, like, could you share some insights on what are the areas where non-visibility of data could hurt an enterprise, and any specific initiatives that you can share which have helped to improve data governance? All right, I think. Are you able to hear me?
So, Preeti, this question is to whom? I mean, to Anand or to the panel or to Vidhya?
It's for you. It's for you, sir.
You're directing to me?
That's right.
Yeah, so in terms of the cost optimization, like I first of all want to thank Anand and Vidhya for the ecosystem of the COVID and how actually it impacted and what are the thought process which was there with the different business adopted and the kind of thought process they brought in. It is really remarkable. But I will straight away jump to certain specific things which we thought it is better for us to adopt. So as you have rightly asked this question, so in terms of the COVID, when it impacted us, there were critical business challenges in terms of there was business interruption, that is number one. We need to work upon the cost control measures, that is number two. And then the most important aspect, there was workflow disruptions. And all these three activities it led to the uncertainty in terms of my profit realization and ongoing concern which was there, and then the cash flow got impacted. So these were first of all the critical business challenges prima facie which we faced in the different businesses. So what we thought is that in terms of, in order to mitigate that, we need to have a very clear-cut path which needs to be identified. And we started working on reduction and managing the cost. So that was our first. So what we did was that, first of all, we identified what is required to be achieved. Then how it is to be achieved came later on. So we wanted to first of all reduce reduce and manage the cost. Then the sweetening of the asset, operationalizing or sweetening of the asset, monetizing the equity part, and then the operationalizing the liability in such a way that we optimize asset, liability, and the equity portion so that the balance sheet becomes strengthened. And then we accelerated the digital path for adopting in the various business. So these were the three main pillars of approach which were adopted to take care of all the critical uncertainty which was there.
Right.
Now, in terms of our management and reduction of cost, if I have to give a very brief of what actually we did in this business, so we first of all identified what are the inefficiencies which was there in the whole system. So the system was broken down into processes, and processes were broken down whether it contributes to my overall growth, overall bottom line, or whether it doesn't contribute, and whether there's an efficiency or inefficiencies and how to tap that inefficiency. Then the second part was that we started optimizing the workforce. Now, this restructuring of workforce is a very vast subject, and there were a lot of activities which was done. One of the most important activity was the delayering of the total workforce. And then there were different other activities which are adopted by not only to directly control the cost, but also to indirectly control the cost, that how much percentage of workforce can work from home directly so that we save on the administration cost. There are lot many processes which got adopted in order to workforce monetization. Then we went on, once the inefficiencies were identified, processes were broken down, we went for automation, integration, and infra modernization. These were the steps which were adopted. And then, if I have to say in detail, the total infrastructure optimization through stacking and through computerization. So those were the processes which are adopted. Once the initial level of all this process optimization took place, we moved for RPA, that is robotic process automation. And then the manual activities, even though they were essential and they were required for the business to continue, those were converted from manual to and those are repetitive nature of activities, from manual to RPA. Then the control process were decentralized so that more people can start working from a different location, whereby high cost area can be reduced to low cost area. Then for value added activities were focused upon so that there could be freeing up of the resources. And then whatever savings which was generated, what we did is the saving got invested again for generating long-term solution for the business in terms of the sustainability. So everything moves around the sustainability part, and there were like long-term and short-term goal which were put up, and those things were achieved.
Right. Wonderful. Yeah, I think that's a very micro level view of what kind of transformation your company has gone through, and it's actually pretty heartening to see that COVID has pushed us all into thinking more creatively, looking at various functions, hitting deep down and identifying where are the opportunities for cost saving, where are the opportunities to sort of restructure, to optimize, in every way, sort of workflows and look at resources. So yeah, thank you so much, sir, for sharing that. Coming to Ganpati, sir, if you can please switch on your camera, and I was hoping to ask you something. All right, I think there's some issue with voice at your end. Okay. So we'll wait for him to be able to switch on his camera. Meanwhile, I'll have to come back to Anand. Yeah, so V-Mart, like we know, is a household name, and it's in the retail business. So I'm sure, like with the COVID pandemic and with GST especially, like how, share some ideas around how, what were the steps you took to effectively manage your supply chain? Was it deeply impacted?
Unmute myself. Or...
I'm just going to come back to you in another 5 minutes while you can switch on your camera. I'm just asking this question to Mr. Anand Aggarwal for now. Yeah. Yeah. So, like, I was wondering, what are some insights that you can share around the steps you took to manage your supply chain effectively? Please unmute yourself, Anand.
This is, yeah. So, so on the supply chain side, I think the digital reset has also worked quite efficiently, and I'm sure a lot of companies and a lot of people have also done very similar things what we attempted. But I think the entire focus has been to how can we transform the entire supply chain efficiency using the digital mindset. There are multiple tools that we had already been using on planning, on making sure that the replenishment process for the stores that we manage is far more effective. But I think last 2 years also gave us a chance to take a step back, assess what more could be done, develop more efficient tools, develop more efficient algorithms in terms of analyzing and assessing how can we move to just-in-time kind of supply solutions for our 350 plus stores across the country. And I think one major shift which has also been very instrumental in influencing the supply chain decision making has been the advent of online sales. So while we've also been present online as a retailer, but I think the last 2 years definitely fueled significantly the aspirations as well as the demand for goods online. And that led to a lot of change in how we used to look upon the supply chain function in isolation. The entire mindset, therefore changed from only supplying to stores to, supplying to customers directly to home in a extremely fast manner. The other big change, I think, which has happened, which has also been influenced by the pandemic and also probably by the GST change in the ecosystem, has been the relook at the centralization or the decentralization of the warehousing facilities. Earlier, if I were to look back, let's say 5-10 years back or 20 years back, I think the decision making around supply chain was more, centered around, at least some part of that decision was centered around the tax benefits. But today, with the advent of GST, I think that discussion or that focus has moved towards efficiency. Because when you have a single rate or one rate across the country and with very easy to get input credit, I think the large focus has been to leverage scale and define your supply chain models as per the need and as per the requirement of how fast you can deliver, reduce cost and increase speed. So the entire modeling is more from a 5-year or a 10-year perspective in future, keeping in mind that the business is going to pivot more towards online, and therefore the requirement of the future is going to be very different from the requirement of today. And that has significantly changed the entire mindset of how we operate and how we visualize the go ahead of the operations.
Right, wonderful. So, I think that's an excellent viewpoint on that. So, coming to you, Vidya, and taking off from where Anand left, is how cash has played an important role. While we have sort of been able to optimize our supply chain, we've reconfigured warehousing, we've reformed all the blockages. When it comes to cash, it could be still be a blocker for a business, especially when we talk about GST and input tax credit. When you have suppliers who are non-compliant or who are not able to file their returns on time, you suffer because you have to pay more taxes and you're not able to claim credit properly. So in this kind of a scenario, what do you think are measures that a business could take to improvise their cash situation?
So I think these are important points, and I think especially given COVID in the last couple of years, where companies had to kind of react with huge swings in cash flow from having from 100 to 0 or 100 to 30 kind of levels, while of course your expenses can at max go from 100 to maybe 90 or 80. And while as a company, you also want to be a good corporate citizen, pay your suppliers on time. So all those things are happening on one end. On the other hand, obviously you have a huge volatility in cash, especially as a B2C customer. If your shows are shut, there's nothing that you can actually do, as a CFO. So I think cash has certainly become, you know, more important than ever before. It's always been important, but I think dealing with it, having flexibility around it is something that I think all CFOs are very acutely aware of right now. From a GST standpoint, in talking about solutions, I think, what we have done, I think GST got introduced, in 2017. So it's been now 4 years. And therefore, I think, initially we had a lot more tolerance and flexibility in terms of suppliers not yet getting the hang of how the systems, or there could be a system issue or whatever it is. But I think now, I think increasingly we are moving towards zero tolerance for non-compliance and it becoming a criteria in terms of even vendor selection. So for example, if people are not filing the returns on time, if they're not showing up, and you can, as a company, you have visibility of that in all these tax portals, including, so we work with ClearTax. ClearTax tell us clearly that this is what, are the people who are not compliant. We help hold back money to the extent of non-compliance, and sometimes, and after that, if and give them letters, we try and educate them. We interact, we work with folks like you to kind of get that, communication across of what is required to be done. But oppose that if further, and I think it's reasonably easy now. I mean, I think the level of complexity which was there has now disappeared. But if companies continue to, not be compliant, then we absolutely have no option but to kind of stop working with them. And I think that's where we are at as a, we need the entire ecosystem to work seamlessly, as a corporate.
Sure. Yeah, thanks for bringing that into focus. As you rightly said, that it's so important for the entire ecosystem to thrive and to be compliant, that unless your suppliers are doing their job properly, you suffer so much that, we've actually had enterprises, who've taken efforts to make their suppliers compliant. So, they are spending time, money, and resources to engage more deeply with their suppliers and help them become compliant so that, their own ITC flows are not impacted. Ganpati sir, I think finally we have you here. I can see you on camera, and please, if you could unmute yourself so that I can ask you a question. Now, yeah, so I'll come to you. I hope you can hear me, sir.
Preeti, I'm sorry. I think I'd informed earlier. I need to jump out because I have another meeting starting. But I'm sorry, and I'm glad I could interact with all of you. Yeah.
No worries. Yeah, I learned quite a bit from interacting with you. So thank you so much for making time. Yeah. And apologies about the delayed start. Yeah. See you.
Thanks.
Yeah. Hi, Ganpati. Coming to you. Are you able to hear me? Just like give me a hands up.
Preeti, I'm
Sure,
able to hear you. Thanks so much. I guess switching between an attendee to a presenter, I got caught in a limbo. So I am.
Not a problem. Not a problem. We are glad to have you back. So, all right. Now I'll begin asking you, and we'll sort of take a step back. Help us understand how. I know you're chief of business and strategy, but as a CFO or as somebody who's heading business, tell us some ways in which one can leverage technology and data to deal with this complex network of suppliers and vendors. We've touched upon that idea. We had Vidya talk about, how critical it is for suppliers to be compliant, and really how, what little they can really do. If you're non-compliant, then you're sort of thrown out from working with a large business. So in that sense, what are the various ways in which you have experienced this, or what are the various ways that you are using data or technology to sort of deal with this situation of suppliers and vendors in a more efficient manner?
No, sure. Thanks so much. I mean, in fact, I think there was a recent Deloitte survey of the CFOs itself, right? And where essentially 83% of the CFOs said that they had actually a third-party risk incident, and 11% actually said it was a severe impact as well. And I think, today, as you rightly pointed out, in a very complex world where you can't, and especially in COVID, when you really can't have any kind of a physical presence or somebody actually going and checking on some of your suppliers and vendors, then I think it becomes extremely imperative to kind of leverage, data, technology to kind of track your vendors, suppliers, understand them, right? And then, and one of the most interesting things that's happened now is obviously, look, businesses are formalizing, and then as a result of that, the government itself, for example, if you look at the Indian context, has been a great enabler in terms of collecting data and putting it in the public domain, right? And so there are enough, thanks to the formalization and digitization, there are enough digital footprints that you have that you can actually, look at and then draw great insights, not only at a point in time when you are establishing a relationship with your vendor or supplier in terms of determining, whether they're credit worthy or, the reputation risk is very low so that you deal with the right kind of entities, to actually, doing a more real-time monitoring itself, right? Because I think one of the most interesting things is, look, given that today, for example, and we were all discussing GST in the public domain, you can know when somebody has actually paid a GST or not, and obviously with consent you can do a lot more. Or today, you can know if the PF is being paid on time for how many employees, etc. You can know if there is any kind of litigation risk. There are a whole host of data points that are available, and then you can actually leverage them to get real-time insights in terms of managing that risk. The other interesting thing is obviously, I think many of the CFOs were kind of touching upon it in terms of the whole need to kind of optimize on costs and kind of achieve scale, right, when you do this. And the whole digitization process itself, and because today no longer do you need to rely on physical documentation. You can actually just do a very efficient digital onboarding, which is very cost effective as well. And so it kind of works on both paradigms, right, in terms of cost as well as from a risk perspective. I'll pause at this point. Thanks.
Wonderful, right? Yeah, thank you so much for sharing that perspective. Yeah, coming to Rakesh, sir, are you there? If you can please switch on your camera. Mr. Rakesh Tiwari, are you there? If you could please switch on your camera so that I can ask you the next question.
Yeah.
Right, we have you back. Sir, if you can please help us, enlist top 3 challenges that a CFO faces today. Now, we've all spoken about cash flow issues, we've spoken about digital transformation, we've spoken about challenges with respect to suppliers and vendors and their compliance. But as a business, as the CFO of a large enterprise, what would you enlist as the top 3 challenges that you face, and any transformative ideas that you can share that we all can sort of learn from and implement in our own companies?
So Preeti, let me tell you one point. This pandemic has helped the world move to a different pedestal, to a different orbit. Biggest challenge as a CFO which comes is we are still not, or the employee or the task force has still not moved to that pedestal, or still not has developed the mindset to move to that pedestal. We are still living in the good old world where we think that everything will become normal once the pandemic will convert into endemic, or say everyone will get vaccinated, something like that. But we need to understand one thing, that a change, which is a substantial change, has happened, whereby the world, the way the things are now moving, is in a totally different dimension altogether. Now, this is the biggest change which has happened, and managing this change is biggest challenge which currently any CXO, leave aside CFO, any CXO which we are facing. Now, every other thing percolates down from this particular point. So like if you have to go for a bot or RPA implementation, You need to find it out whether your workforce or your task force is properly trained to handle that. Whether they are well equipped to understand the end. That is number 2. Number 3, in terms of, I was listening to some of the point made by Mr. Ganpati regarding the supply chain. So supply chain, the way the things are now moving is in a totally different direction. Gone are the days when you as a CFO are not on, are like you got silted away from all the supply chain or disruption and you left it to CPG or like a procurement group and their those people to follow it up. Now as a CFO, because you need to take care of top line, bottom line, and now you are exposed, your business is exposed to a lot of uncertainties. You have to get involved into each and every business decision. And one of them is the supply chain, whereby you need to understand that you have to start developing your alternative vendor. You have to start not only developing the alternative vendor, but you have to also look towards empowering the vendor and strengthening them. I mean, sure, those concepts have slowly come into the picture, but these change in terms of the Indian perspective, in terms of the quality of the workforce, which most of us are having, at least in our organization, that challenge which is there, whereby the change in the mindset from one orbit to another orbit, that is yet to come out. And I'm telling you, no sort of training, etc., will help it until unless we itself realize that the world has moved ahead. It has gone to a different pedestal. People have started looking from a different lens. And the big organization like ours, if we still believe that we are still sitting in a very hunky-dory or ivory tower where we can dictate our terms, those things are gone. If you see, one of the lessons which has been taught in this COVID is the small, medium enterprises, not in strict terms of the law, MSME, but those which are small and medium enterprises who were able to change quickly, adopt it, they were flexible enough to change as per the business need and requirement, were able to cope up with this COVID situation. Those who were able to face the disruption, those who were able to lie down when the headwind was there, they were able to cope up with this COVID. But the big organizations, if we look at last 20 months, the business which has fallen down were the bigger businesses, those who couldn't withstand the disruption, those who couldn't mend the ways they were supposed to be, but still believed in the good old days. So that is one of the most important challenge, how to manage the change. And all other points to me come from that particular point.
Right. So that's an excellent thought. And, you, as you very rightly said, it's all about our mindsets. And, especially sometimes, we feel we are still living in 2019 or perhaps still it's 2020 because, we are all hoping to get back to the same old world. But as very rightly pointed out, things have completely evolved. The way we do business, the way we manage our cash flows, the way we sell, the way we buy, the way we comply has undergone a complete overhaul. Now, before we close the discussion, I have a question coming in for you, Anand, and I think it relates to you. It says it will be good to know there's somebody called Rajiv, and he's asking a question. It will be good to know the pros and cons of, I don't know if he meant V-Mart or D-Mart because these are two different companies, model of operations which allows online ordering an option to pick up from nearby delivery center. I think the person wants to understand, like you order online and what are the pros and cons as a business for you to be able to allow people to come and pick up from a nearby delivery center. So if you can share any insights, I think the audience would greatly benefit.
Sure. So I think the question is meant for the D-Mart model, which is a different company, and I will not hazard a guess on how they operate. But at the same time, I think from a concept point of view, I can just explain in a very short manner. Basically, what he means to ask is around click and collect model, which is one form of the model in which online e-commerce works, whereby a retailer can catalog his products on a website or on an app, and the user can select the product that he wants to buy. Instead of that product getting delivered to home, the user selects that I want to collect it from the store. And this is a very prevalent model. It's been, one of the earliest models on which e-commerce thrived in the West. Although I must also say that it's not one of the most successful models because of supply chain logistics issues. and difficulty in securing the transaction. But at the same time, as a model, the way it works is that the customer picks what is the product that they want to buy. He gets the acknowledgement that what is the time and date when he can come to collect it. He comes to the store, pays the money, and collects the product. The advantage is that he saves time. He doesn't have to wait in the queue, and he gets the right product at the right pricing. The disadvantage is for the company that in case the customer does not come to collect, that item is out of circulation, and therefore there's a loss of sale, a possible loss of sale.
Right, wonderful. Thank you so much for fielding that question, even though you are V-Mart and not D-Mart. So yeah, wonderful there. Mr. Ganpati, add the last and final question for today's panel discussion. As we know, trade credit is fraught with risk, but at the same time, it's required to drive your own business. So, how can CFOs manage their credit risk better? If you could please throw your ideas around that.
Sure. I think obviously, I think while everybody talks about the distress that the banks have, right? It's seldom talked about that many of the companies, and today, for example, when you look at a large power plant which went into distress, the EPC provider for that power plant also had distress on their books, right? So credit, given that it's part and parcel of business, obviously one is CFOs kind of deploying supply chain financing to kind of mitigate some of that risk. But then even then, you would still need to take some amount of risk, and especially on your dealer network, etc. And one of the things that's happening, and which today banks and finance companies are kind of adopting at scale, is again, how do you leverage data and the digital footprint, both public, private data, to actually, not only determine the risk, when you're underwriting that trade credit risk, but also then how do you, on a real-time basis, monitor that risk, right? And I think it makes sense for CFOs, given that there's this considerable amount of exposure that they have, to actually start thinking like a lending company as well, in terms of their ability to kind of underwrite risk and monitor that, because especially in the days when margins are getting kind of squeezed, one can ill afford bad credit to kind of dent that profitability as well. So clearly, I think a thought is then, how do you think like a bank, a finance company, and then use scoring. There are today, based on data, you get a lot of algorithmic scores as well to kind of determine. So you can have a very objective criteria in terms of saying, obviously, determining that if there's a certain score, a credit score, then obviously, let's just say if it's in the top 25 percentile, then perhaps they can think about a 90-day kind of credit. If it's in the bottom 50 percentile, then maybe you have to kind of restrict it to a very limited period, and then kind of see how they evolve with you as a partner. So one is to kind of use these kind of credit scores to trust scores, as we call it, to kind of balance and manage this in a very objective manner. And then obviously the whole endeavor is to then, while you kind of judge them from your business relationship, how do you then again look at the world of data that is available to track them, to kind of ensure that, they might be performing well with you, but then, they don't have a risk with some other entity. And then how do you know that somebody has not taken them to an NCLT, etc., right? So there are ways to kind of track that. And so I think the way forward would be to kind of, for CFOs to think and behave like a finance company to kind of ensure that they don't lose on this.
Right. Yeah, wonderful. I think that was some interesting insight, especially the way you spoke about scoring, who you're dealing with, and that also equally applies in the context of our vendors and suppliers. We need to score them, not just how what their payment terms are like, what their compliance is like, and sort of be able to manage our own cash flows better, maybe preserve our risk and see Yeah, that's very exciting. And on that note, actually, Clear has also been working on a network of businesses, where you have your vendors and suppliers, and you are able to sort of manage all your payments, taxes, credit, all of that put together. So yeah, at some point, we can talk more about it perhaps later. I can see that there is a prompt which is coming to me that there's not much time left. So I'll just take a last few minutes to close and say thank you to each one of you. Rakesh sir, thank you so much for joining in. It was wonderful to have you and to understand, what a big company like Adani Electricity would be doing in terms of, coping with the pandemic and, reforming their enterprise. Anand, thank you once again. Glad to have hosted you. There were some interesting insights that came through. Yeah, thank you so much. Wonderful having you. And Ganpati, glad you joined in. It was just the four of us. So now we have another perspective and we have someone talk about the credit side of things. So yeah, wonderful to host you. And thank you so much, gentlemen. And hope to catch up again sometime. Thank you.
Thank
Thank
you.
you so
Thank you,
much.
Vicky, for moderating. Thank you, all the panel members, for the
Thank you.
insight that you have shared. For sure, delegates have benefited out of your experience and the insights you people have shared. On that note, we will end
Thank
this
you.
webinar.
Thanks,
Thank you,
everyone.
delegates, for your time. Thank you all. Have a wonderful day ahead. Stay home safe and take care.
Thank you.
Thank you. Thanks, everyone.